All right, guys. So today we have CPI inflation data. One of the biggest days of the month. We'll see what we get today. The Q is down, Nvidia is down, gold is up. We're gonna share our screen real quick right now. There we go. Yeah, you can see Nvidia down a little bit today. Pulled back some from the craziness where it was up to like 740s. Just ridiculous numbers. Q up, gold up. We're gonna wait for the CPI inflation report to come out at 8:30 Eastern Standard Time today. We are ready. Expectations today are 0.2%, I believe. I think it's 0.2%. Let me make sure. Yeah, it's 0.2%. Core CPI expected at 0.3%. We're gonna do a poll. All right, so CPI inflation data going live. What's up, Jay, Harsh, Red Bull, Roderick, Mo, IRL, Martin, Yair? What's up, team? Let me drink some coffee. Beach Bum, what's up, dude? I got my Winnie the Pooh mug today. It's good luck, you know. Let me get a timer up as well. We gotta do a timer. So I tried bringing my son to jiu-jitsu last night. He wanted to go. He wanted to go. I didn't even force him to go. I told myself, look, I'm not going to force him to go to jiu-jitsu. He wanted to go, and then he goes. And we told him ahead of time, man. My son just doesn't like losing, bro. And I guess I was like that as a kid, and I'm still like that now. I don't like losing. I hate to lose, you know. But we warned him. We were like, yo, jiu-jitsu's not one of those things where you're going to be able to just go in and just beat everybody. That's just not going to happen. You know, like, be optimistic, but, you know, probably not going to happen. And he goes in there, and they got this tank of a kid, you know, this tank of a kid. And this kid just takes him down and does whatever. And then he's super angry, and he's having another blowout at jiu-jitsu. Part of me is like, bro, I'm just not going to bring him back. You know, I'll bring him back when he's like 12. Let him get some maturity under his belt before, because it just ends up causing a scene. I get stressed out by it. It doesn't seem like it's ever getting better. All right, so we got an hour and 40 minutes left, 39 and a half minutes left until CPI drops. Or no, my timer's off. Whoa. I don't usually get this wrong. Wait. We got an hour and 10? No, we got 2 hours and 10 minutes? We'll call it 2 hours and 9 minutes. Yeah. All right, we got 2 hours and 9 minutes. We're starting the stream really early today, and that's all right. Yeah, we've got him in Muay Thai, Harsh. Oh yeah, Coca-Cola earnings this morning. We got a bunch of earnings dropping. So yeah, like, we've had him in, like, listen, I'm like a big martial arts guy. Like, I do jiu-jitsu as an adult. I do a little bit of striking and kickboxing as an adult. Like, I'm a big martial arts guy, right? And so naturally, my daughter loves striking. My daughter's actually really good. She's got a great hook, like a great left hook. She has a great leg kick. Like, my daughter's legitimately good at Muay Thai, but she's 14, you know? So, like, she's old enough to be mature enough to, like, want to be good and understand the discipline it takes to be good. My son just, he's just turned 10, and, yeah. All right, so wait. We do have Coca-Cola earnings. They're not for a couple minutes. All these earnings are late, so we'll cover them. I mean, we'll stream them. But we got Coca-Cola earnings. I'm in Coca-Cola, believe it or not. I'm down on my portfolio today. I am green on the overall portfolio, though. Like, this is a very good portfolio. It's been treating me very, very well. So we'll see what Coca-Cola shows up as. We're not in a huge position for Coca-Cola. We've kind of scaled out of it over the last few months. Coca-Cola is scheduled to drop at 6:55 a.m. Yeah, I mean, I'm in ARM as well. Although, and man, ARM is just chaotic. 164s. The only one I have row is BABA. I am holding BABA. I did buy BABA. And we're down on BABA, but we're down less than $100. It's a pretty small trade overall. We're in 25 shares of Alibaba, so it's small. KO is too slow? I don't think so. I mean, listen, I got in Coca-Cola, just to give you some perspective. I got into Coca-Cola at $52 and something cents. It's at basically 60 right now. And so percentage-wise, that's 20%. I'm up 20%, and I bought this thing. I bought this thing in October. So since October of last year, so 4 months, I'm up 20% in Coca-Cola in 4 months. So, I mean, you know, that's pretty big. That doesn't seem slow to me, but I mean, it's all relative and subjective. Will Nvidia reach 1,000 or has it peaked? I think it'll eventually hit 1,000. It is 60, but it's a slower increase than the SPY in the same period. Is it really? Did the SPY move up that much since then? Let's see. So this is October. I bought this thing in October 6th, early October. So let's take a look. All right, so the SPY, here's early October. This thing was at basically 430s in early October. Right around 430s. We'll call it 430s. It's gone from 430s to 500. All right, let me get my calculator out. So that is 430s to 500. Yeah, that is a percentage gain of 16 point something percent. So I mean, it has outperformed the SPY by a small margin. You know, Coca-Cola were up 20%. SPY were up 16.27. I guess with Coca-Cola, we're technically not up exactly 20%. We're up a little bit less than that. Let me be fair here. Versus the valuation. So we're going from 52 to 59.50 or 59.60 technically. Okay, so yeah, you're right. It's about even with the SPY. Coca-Cola is about even. So Coca-Cola is up about 15%, not 20%. That couple dollars is, you know, yeah. So either way, it's still 15% solid. You know, it's solid. I can't listen right now. I think it depends on what the market is doing. I think if the market is moving slow and you want to find blue chip tech stocks or whatever that beat the market, that's fine. But I don't think it's always going to be feasible. I think that if the market's moving well, you trade the market and you invest in the market. If the market's not moving well, then you can find other tech stocks. I guess my point is, like, when the market's moving like it is, moving up 24% in a year, I don't know if it's going to be the most feasible thing to chase stocks that are doing better than the market in these moments. You know, you might be able to find them in AI, but what's the risk that you take in those stocks? I think that's the thing you got to really consider there. But again, it's all, like, I get both sides, I guess. Yeah, but Coke has no liquidity. The long-term chart does look good, though. Yeah. It will explain to me the difference between COKE and KO stock. I know about Armin. It was listed in the UK stock market 15 years ago, but SoftBank took them private soon after. I can't buy anything so close after the IPO. I'd rather wait for a big dump first. I bought it on IPO day. This is one of the few IPO trades that I got in on IPO day because I was hyped up about it, and it ended up working out for me. I got it at 63.50 is my average price. 63.50. Technically, my average price is 63.55 is my technical average price here for it. So just to show you, this is my technical average price, 63.55. I have no idea, actually. Yeah, all good, I guess. All right, guys. CPI day today. It's a big day. We got 2 hours. You know, if you ever feel bad about life, guys, all right, if you ever feel bad about life, all right, always remember that there was a man called Laszlo Hanyek who 8 years ago purchased 2 Papa John's pizzas with 10,000 Bitcoin. 10,000 Bitcoin in 2010. And this was actually, 14 years ago. He bought 2 Papa John pizzas with 10,000 Bitcoin. 10,000 Bitcoin would currently be worth over $500 million. You know. So, perspective here, guys. That's all I'm saying. Yeah, I mean, CPI day is the natural correction day, I think, in my opinion. I think today's one of those days where it's just a natural correction day. I think big movement comes. I'll probably scale out of some stuff ahead of today. I don't necessarily want to sit on this. I'm up very nicely on the year already, and we are a month and a half in. I will probably liquidate some trades today. Some, not all of them. It depends on what it is. I'm going to liquidate my more speculative holdings. You know, this guy Jack Ford says, I think 150 to 225,000 has to be the worst salary range. You make too much to say F this place, I quit, yet not enough to be financially free without a job for any significant amount of time. I disagree, okay, and I'm going to explain why. Regarding taxes, it's the perfect salary. Okay, you make enough to where you make a lot, but it's right before the marginal tax increase bracket. Like, so it's the perfect. 200,000 is specifically what I mean. 225K, you're still gonna have to pay that high marginal tax rate on that 225K, but still, it is the sweet spot. I think tax wise. Like, you want to make 200K, you don't want to make 300. You make 300, you're gonna spend 50K on that last 100,000 or whatever the last tax bracket is. Hold on. Yeah. So from 200, let me make sure this is right. Yeah, once you start making over, you pay 24%. It's really 180K. I think they changed it. Oh, wait, if you're head of household. Okay, so yeah, it's 200K. Once you pay that, you got to pay 32 to 35%. So yeah, on that last 100K, you're going to have to pay another $40,000 in taxes. Hey, what's up, P? Guy from part of England buried 3,000 Bitcoin in an old PC that went to our local landfill. I know I saw that. I remember that. If the market does drop, it might be super brutal like the bad days in 2022. If it does, I'll probably buy some stuff up. Like, you know, I've been a part of corrections, pullbacks, drops, and all that good stuff, right? But I've never really had like significant buying power for investments in those periods of time. Like, I've had 20K or whatever, but I've never had enough to where I could say, okay, let's get a decent bet on the bounce. You know. What's your CPI prediction? I don't know, man. Honestly, part of me doesn't even want to make a prediction. I've gotten four in a right correct. I've gotten 4 in a row correct here. I've gotten 4 predictions for CPI in a row correct. Part of me doesn't even want to make that guess, dude. I don't want to ruin my streak, bro. I've been doing it for 4 months now. I will, but just stick around. I'll make a prediction, but Michael Saylor's Bitcoin investment is now at a $3.5 billion unrealized profit. Bitcoin. Is Bitcoin over 50K? Whoa. Bitcoin is now over 50K. Hold on, let me look at this. It is. No, Bitcoin is at 49.9K. 49.9 thousand. And it broke 50K yesterday, or early this morning. So Bitcoin effectively broke $50,000, team. That's great. That's great. Shout out to it, man. It's making its next bull run. What do you guys think? Oh yeah, let me do the poll here. My bad, guys. Video down a little bit today. Let me do a poll. Does CPI come in high or low? Is what I'm gonna do the poll. All right, vote on that poll, guys. Does CPI come in high or low? Hey, congrats, serve it. All right, so ARM trying to move up. We'll see if it holds. Low. Again, we're gonna make our famous prediction later. Again, we really have gotten like 4 in a row correct. Like 4 CPI predictions in a row. I can't remember what I bet on. Somehow I've gotten 4 in a row right, which is very outside the odds. Like, that's very outside probabilities here. Let's just be honest for a second. The likelihood that I'd be able to get 4 in a row correct, and these are not always the same, they're always different. The likelihood that I'd get 4 in a row correct, you know, I don't know, man. Now I'm nervous to even make a prediction. Not enough sellers to crash this market. My experience of the ETF is they keep the asset class low for several years of the ETF launch. So why do we think Bitcoin will change a historical data record like that? More people are bullish. It won't end well. Yeah, vote on the poll. Let me know how you feel. right, so we got over 200 people here already. That's good. We'll see what CPI shows up as, man. I'm excited about it. CPI days are always fun. All right, so Hasbro just reported earnings. They posted adjusted EPS of 38 cents. Adjusted EPS of 38 cents. Sales of 1.29 billion. So they missed both. They missed EPS. They missed sales. And Hasbro, which is a toy company, is down. I think here's the problem. All right, here's the problem. Let me give you I'm going to give you an argument against toy companies. All right, here's the argument against toy companies. All right, now, one of the things that we've seen that has fundamentally changed the way people do business over the last decade is mail order shipping. Like ordering things online, getting it very efficiently shipped to you very quickly, right? That is an objective truth that has gotten noticeably better through Amazon and services like it. And so we have to think the broad implications of that type of technology change. Not to use a bunch of big words, but I think we got to look at the broad implications of that. And one of them, meaning we are going to have exposure to many more brands of toys, right? Historically, you had a couple big toy brands. Those are the ones that did the deals with Walmart, Target, Toys R Us, all the big boy stores. And so those are the ones that people ended up buying and turned out to be successful, like Hasbro, right? But looking and delving into the future, what do we have? I think we have something in which toys are now bought online a lot. Like we have a lot of small competitors that are able to compete now with the big brands because we have so much more exposure to those brands through online means, and we can get those type of products much more efficiently. And so my argument against toy companies is that, which is you don't have to buy from the big boy brands anymore. It lets smaller toy companies experiment and put out toys. Now, the other argument against what I'm saying is this, though. Typically, the toys that sell the best are revolving around movies, and maybe the dip in movies is not going to be. Maybe the dip in movies is going to mean that we don't get as many toys around movies anymore. But one of the things that we've seen historically is we've seen movies come out, big movies at least, and they do deals with the big boy toy companies like Hasbro. And so I'm sure they're still going to have some deals like that they go through, but I think they're still going to be less common. I think they're going to be less common. Less people are going to see these toys. Less big movies are going to come out in general, in my opinion. I think that's something that we're seeing as well. And so you got to speculate on the future of toy companies like Hasbro. I don't know. Let me know what you guys think. Do you think Hasbro is a buy or sell? Let me know. I don't know. We'll watch the movie, what was it? Small Soldiers with my kids not too long ago. Great movie. I hope the data isn't because of the election year. I mean, maybe. I don't think it's going to be that. I think that bears need to prepare themselves for good data. And I think bulls need to prepare themselves for bad data. And if one comes out that you don't like, it doesn't mean it's rigged. Now, maybe the numbers are a little twisted, but I don't know. I think it's okay. I think one of the things that we're seeing is that we're seeing rebounds in the labor markets. We're seeing rebounds in GDP. We're seeing rebounds in economic strength. One of the reasons we're seeing that is because we're just now getting back to business as usual from 2020. 2020 took a couple years to really get back to normal. And so it's normal. And this is something that Jerome Powell referenced in the last FOMC meeting. It's normal to have strength in a period like this, in which we're coming off of the disastrous 2020 plus following years. And so it's normal to have strength and rebounds into all this stuff. And it's also normal after we had quantitative easing and inflation spikes, for inflation to get back a little bit more under control and slow down some afterwards. That all of that's pretty normal, I would say. So I don't think they necessarily need to rig the numbers. I think what we're experiencing now is normal. I think AI is what saved the market and made the market not have such a big correction relative to what we've seen in the past. I think the AI technology, every few years, it's kind of like the online internet boom, guys. Like, think about what happened in the 1990s, mid-90s, and early 2000s, in which you had a lot of online companies because the internet was so new. People realized you could profit and make money from the internet, and so a lot of internet stocks grew and then failed, and then ultimately some succeeded, like Amazon and all that other stuff. And so I think I don't think it's sometimes you get bears who really want the market to go down. Maybe it's because they missed some of the big upward moves that the market has done. Maybe it's because they're shorting the market. I don't know. But I think sometimes they get really rigid, and instead of saying, hey, the market doesn't necessarily have to go down, they say the market has to go down, and if it doesn't, it's rigged. And I don't know if that's the best mentality to have with stocks. I think you have to look at things objectively and understand that the market doesn't have to do anything. If it did, everybody would be rich. But it doesn't. Just like the market doesn't have to go down, it doesn't have to go up either. And I think getting into a reactionary mindset with this type of stuff is the right move. And I'm not targeting anybody specific there. Yeah, all good. Yeah, it certainly does have to go down for sure sometimes. And again, I agree with you in that regard. I think it's extended on the upside. But I'm also long, and so if I'm wrong here, I'm okay with that. Who's using AI every day? A lot of people. A lot of business people specifically. An example of that, you want to know an example of this, is newsletters. Newsletters are very big right now. Newsletters are big. They have been big for years. Now, historically, you just had to write the newsletter every morning. Now, I promise you, there's a lot of AI, or there's a lot of business and just newsletters in general that are being written mostly by AI and then being proofread afterwards. That is certainly something that's going on. Anyway, SPY at 499.20s. We also have earnings dropping. So again, we have other earnings. We got Shopify, Datadog, Marriott, Biogen, Hasbro, Moody's, Coca-Cola. Coca-Cola is scheduled to drop in about 10 minutes. So we got some big boys coming out. Hey, thank you, Arun. I appreciate it. Moody's, yeah. Thoughts on Robinhood? They've got earnings today, and they also hold a ton of Bitcoin. I think they're interesting. All right, so Michael Saylor says MicroStrategy is now a Bitcoin development company in the same way you would see a real estate or petroleum developer. I could agree with that. I don't think that's a bad move. C3 AI, guys. What do y'all think of C3 AI? We're starting the stream early. I tried to go back to my roots where we started the stream really freaking early. And so that's why we're... Yeah, man, no offense, but AI is just in the developing stage, not real profit usability stage. I mean, listen, we can argue that, and I get it. There's a lot... This is what I think happened. I think that one of the things that you see is you see people, a lot of people... skeptical of AI from the beginning. And so a lot of people say, yeah, AI is not really, this, it's not really that. It's not going to be a big thing. I heard people call it buzzwords and like a lot of stuff a year and a half ago. And I was sitting there being like, no, I think AI is going to fundamentally change production as we know it in tech, especially. It's going to make an exponential growth in production and technology, in my opinion, just because it allows developers and creators to build things faster. I don't know. And we can argue that it's not really in that profitability stage. I would say if we pull up NVIDIA's revenue graph, I would say it begs to differ. I think if you look at the revenue increase over the last 3 quarters, specifically in NVIDIA, in AMD, and a lot of these tech stocks, I think for the big boys, AI is certainly influencing their bottom line in a positive way already. I think that's very clear in the revenue graph of companies like NVIDIA over the last few quarters since AI has really taken off. Again, you can kind of see it there. And I think that might continue into the future. But who knows? Again, you may be right. Maybe I'm wrong. It's all good. Thank you, Joseph. Coca-Cola. Yeah, Coca-Cola drops earnings in about 5 minutes. When you talk with your bank, you prefer to chat with a robot or a real person? It depends, in all honesty. But but again, regardless of that very specific situation or a very specific preference, that doesn't mean AI is not going to succeed. That's just a very specific situation. And again, I don't think the companies or the banks really care what what people prefer or don't prefer. I think they're going to go with the most efficient, most productive thing for cost. And I think using AI in those situations is obviously and self-evidently going to be the future, just because they can. You see it already with chatbots, like tons of chatbots. Previously you used to have to hire a bunch of people and have them on your payroll, and prior to remote work you used to have to stick them in a call center somewhere, and it was expensive and margins were worse and all these different things. Lately we've seen AI replace that. We've seen remote work replace that to a certain extent as well. And so I don't know. I think AI is much more than customer service rep, but I still think it's going to replace it. Yeah, 100%. There's already so much, like, companies are making money with AI. Absolutely. There's tons of consulting businesses that have sprouted up over the last 6 months based purely off of AI that are worth millions of dollars now. AI is certainly moving things. We're past the point where people argue AI's validity, in my opinion. I think one of the very common ways to gauge a technology is, what does big money do? And I think big money has very obviously gotten involved with AI at this point, and I think that is a great sign of its validity overall. I think if big money, again, I always use it against penny stocks. Like, one of the things you don't see big money do is invest in penny stocks. But I think big money has certainly got involved with AI, and they're certainly making bets on the future of AI, Zoom was over a couple years ago because they were going to change the communication space. Well, I mean, they did. The problem is, like, they had... okay, I think you're misinterpreting... And again, these are good conversations, so like that's why I'm answering these questions. I don't mean to feed the trolls, but Zoom did change technology. The problem with Zoom is that it was vulnerable to competition long term. Everybody started offering their own streaming software. Zoom was no longer unique. Now Discord you can stream, Google you can stream. You can stream through all these other places for free. And so you don't need Zoom like that anymore. There's a lot of free options now. And Zoom's still pretty big. It's not like it's a small company. It just got overhyped in that period of time. But people are working remote more and more now. And so, yeah. And Zoom is still, what's the market cap for Zoom? Zoom's got a 20 billion market cap, so it's a smaller market cap. But... I mean, I definitely think Nvidia has a high PE ratio and can certainly be argued as overhyped. The difference, though, is that I think Nvidia could grow into that hype, and I think that's something you see companies do all the time, where they get big price valuations and big price increases, and then over time the company grows into that price and holds. You see that a lot. Now, it doesn't mean it has to happen, and again, I'm on the other side of that, where I think we're probably kind of extended on the upside, and regarding CPI today, I'll probably cut some of my positions ahead of it, in all honesty, just because I think that we are extended on the upside. I just don't think we have to do anything. I think sometimes you see people and they're like, hey, we got to go down, or we got to go up, or the market has to go down, and if it doesn't, it's rigged. And I think people are looking at the market wrong. You know, if the market doesn't have to do anything. And I think you have to understand that aspect of it. Now, probability-wise, it could swing to one side or the other, but it doesn't have to do anything. And I think when you start understanding that, you got to be less rigid, more flexible with it. Nvidia is still at 7/16, though. It is pretty high. PE ratio-wise, I think the PE ratio is at 100 right now. Still very high, very high. Yeah, the Microsoft chart. We can also look at the Microsoft revenue increase from AI. You know, not even talking about Nvidia, but like let's look at a legacy company like Microsoft and look at the graph for it. We're waiting for Coca-Cola earnings to drop. They're going to be dropping pretty soon. Here's Microsoft. Microsoft down a little bit today for sure. But again, I mean, I think when you see how much Microsoft has even started growing on the revenue side since AI is big, look, here's their revenue graph over the last few years. I think a very obvious increase here. A very obvious increase. Now, again, I don't know if we're going to continue, but, you know, looks pretty solid, and I think a lot of this is from AI. Of course, Microsoft famously did their Bing AI search engine, and that has helped pull a lot of people towards Microsoft search engines and Bing. All right, guys. Hey, we got Coca-Cola earnings set to drop in about 30 seconds. 30 seconds. We got Coca-Cola here. I'm going to put it in the middle, and then we can put, like, SPY up. Here's Coca-Cola on the right side. It's at 59.30s. I'm in Coca-Cola right now. I hope it continues to push up, but it's a small share size. Yeah, I mean, I don't necessarily disagree with you, Digital, in that regard. You know, regarding Nvidia, I don't necessarily disagree, man. I could argue. There's a Coca-Cola dipping down. We're at 58.90. But yeah, I'm not arguing that we're not extended on the upside. I agree with you in that regard. I just think that there's a chance that AI grows into it. All right, Coca-Cola back up to 59.60, 59.50s. Let's see what Coca-Cola showed up as. All right, so Coca-Cola posted 46-cent EPS versus versus 48 cents expected, so a slight miss in EPS. They posted revenue of 10.8 billion. They expected 10.6 billion, so they higher than expected revenue, a slight miss in EPS. Actually, I'm showing adjusted EPS was 49 cents, so a slight beat in EPS, a beat in revenue. And Coca-Cola is now up to over 60. So over 60 now for KO. You love to see it. Again, adjusted EPS of 49 cents, right around in line with estimates. Revenue of 10.8 bill. They expected 10.66 bill. Worldwide. Yeah, we'll put these up on screen so you can see it. So yeah, in line estimates with Coke. Fourth quarter sales beat. No, it's a Coca-Cola tap 60s. Better than expected numbers here. You know, I've never wanted to short a company more than Herbalife. Herbalife, terrible company. Just a horrible company. It's down almost 50% on the year. Everybody knows it's a scam. Everybody knows it's fake. It preys off of low-income communities, and it's a pyramid scheme company, essentially. It's not technically a pyramid scheme. It's an MLM, but the company revolves around misleading consumers, and it's just a terrible company. Coca-Cola up to 60.2. 60.2. Part of me wants to short it. Is it easy? It is easy to borrow, so it is shortable. Airbnb you playing today? I mean, I'm not gonna stream it. How big could a drop be if CPI does not have desired results? Whew, I don't know. It could be a pretty big drop. If numbers come in high, it could be a very big drop. All right, Coca-Cola up there. When's divvy day for Coca-Cola? When do I get paid my dividends? They pay 3% yearly. Okay, so my divvies are already paid for Coca-Cola. I guess we're just going to sit on it. These are pretty good results. I'm long Airbnb. Again, I'm torn on Airbnb. It's one of those companies that I don't trust enough. I just don't trust it. I really don't, man. The reason I don't trust Airbnb is simple. The fees are too high. On toss, if you bring up the 1 day, 1 year chart. Yeah, daily chart. Yeah, I see the divvies right here. Again, I'm green in it. It's such a small position though that I'll probably just let it work. Is Tesla buy yet? Tesla, I'm basically flat in Tesla. I was patient. I was patient with it, but I did take some off yesterday when we were at the peak, and it looks like that was the right move. So I took a little bit off of Tesla yesterday when it was at 195, almost 195s. And so we sold almost right at the top. And again, in hindsight, we ended up dipping a pretty decent percentage afterwards, so I protected myself a lot there. Again, Coca-Cola earnings are in chat. We posted them right here. They posted a beat on sales, inline EPS, adjusted EPS. So neutral EPS, inline sales, or inline EPS beat in revenue. Yeah, I'm in that one as well. Datadog has earnings this morning. They're pumping, they're dumping down. Yeah, look at Datadog fall. Here, DDOG. Down to 115s here, guys. 112s. Again, I'm not in this company. I don't know enough about it to buy. They've dropped adjusted EPS of 44 cents. They expected 44 cents. Revenue of 590 million versus 570 expected. So they had better than expected revenue for Datadog. Neutral EPS. They must have seen something they didn't like in this, though. It might be one of those trades that I buy up unless we see some bad guidance here. Let me see. I'm gonna go ahead and buy this dip in Datadog small. We're gonna buy a little baby dip here and see if we can catch a bounce. It moves fast enough to where we could get a quick little pop back up here to 120, 122s or so and make a little gain from it, but Speculative for sure. Yeah, I mean, you got to understand why, like, what I usually do with these earnings plays, Yair. So, like, my favorite swing trading / investing strategy is I wait for big overreactions in earnings. And again, a company posting better than expected revenue and neutral EPS and then dropping what a big percentage here is typically what I look for. Now, a lot of the time it's just a day trade. It could be a swing trade. It just depends. But I look for a big overreaction to the downside and I buy the dip and then I look for it to bounce back short term, a small amount. Like I'll take profit on this bounce. There you go. Took half off. Made a quick little 30 bucks. Take another little piece off. And now we got 2 shares left, and I can just essentially just hang out with that and see if we can bounce back some more. I do this all the time with earnings. It's really one of my favorite strategies. Now I took enough profits where I'm not going to lose on this trade, really. And we'll see what happens on the rest. It's a small trade. But yeah, we're definitely red on the day. I wonder if this is some foresight into what happens for the rest of the day. Yeah, I mean, I think that one's too unpredictable. Digital CPI will come in at 2.8% on the year. We'll see. I don't even want to make a prediction. Again, I've gotten, despite the odds, I've gotten the last 4 CPI reports in a row correct, I think. Which is, again, I don't know, like statistically, it's pretty improbable. But somehow I've predicted, and again, you could watch the streams, the last 4 CPI reports in a row correctly. So I don't know if I'm gonna make a prediction today. What do you guys think? Shopify missed. Yeah, Shopify's out. Did they drop today? They're pretty flat though on earnings. Okay, they did drop. So Shopify is out. Moody's is out. Shopify posted 34-cent profit EPS versus 31 expected. Revenue of 2.14. They expected 2.08. So Shopify actually beat on both metrics. We'll put those up in chat. There's Shopify's numbers. We also have Moody's. Moody's is out. Marriott is out. 357. Marriott did really well. I wonder if that's a bad sign for... or no, Marriott missed Rev. Let's see what their actual chart price action looks like. So here's the SPY. Marriott hasn't really moved at all. Here's the Q. Q and SPY are breaking down. I wonder what's driving this. Maybe Shopify, I guess. Look, there goes Datadog bouncing back up some. Easy to predict when all you say is, I don't know. I mean, listen. The last 4 CPI reports in a row, I didn't say I don't know. Well, I said I don't know, but I said I'm going to go with X prediction. I said I'm going to go with 0.2%. We show up at 0.2%. I'm going to go with 0.3%. We show up at 0.3%. And so I've gotten the last 4 CPI reports. And I will add, jobless claims last Thursday exactly right. Last Thursday I said 218,000. And we showed up at 218,000, and that's not what was expected either. So hey, listen, I'm gonna brag about my streak. Haters can hate, it's all good. Let it out, it's okay. Listen, if I was watching some guy and he was just wildly correct about everything he said, I might get mad at him too. It's all right. On a real note though, ARM is now breaking lows in pre-market. ARM down to 139.50s, 139.50s. I don't know as a standard financial response. Yeah, it's the internet, right? So you can't please everybody. If I say, hey, this is going to happen, and I'm wrong, then people are going to shame me for that, right? If I say, I don't know, then people are going to shame me for that. Either way, people are just insecure, and kind of jealous, I would say. And so people are going to get weird no matter what you do, and that's all right. We embrace it. ARM just broke lows though. Part of me, I don't know whether I should sell my ARM position or not. I'm watching Shopify. We did buy Datadog and we're up and we've made enough on that little bounce. I'm here because you're honest. I know. I think a lot of people are. Thank you, Mike. I appreciate it, brother. Thank you. Yeah, and some of the haters are just people who create fake accounts. Like they've been banned before. Maybe they worked with me in the past and they just kind of get weird. If you don't have much going on, it might drive you to act like that. You know, it is what it is. I kind of feel bad for him. Shopify trying to go green. Yeah, I'm in ARM. I got ARM on IPO day. 63.55 is my average price for ARM. I'll take it. I'm assuming that's a penny stock long. Yeah, it's a penny stock. It is pumping up, though. I mean, look at it. If you guys like penny stocks, I'm not telling you to buy it, certainly, because that's just not what I do. But OMH, up to $6 from $1. So this thing is up 500% from 1 to 6. Crazy. Yeah, Shopify earnings are down. Shopify didn't do that bad, but it definitely didn't do good. I'm here because you're an awesome dude. Hey, thanks so much, man. OMH is breaking highs. I mean, I could cover penny stocks. This guy acts like we're in the top 3. We are in the top 2. Definitely top 2, for sure. Companies are trying to work around ARM. Yeah. ARM is a gauge on the AI sector as well, though. Like, ARM is an AI stock, and so it's gauging the AI sector. Datadog all the way up to 117s. 117s. I don't know what to do here. It's right around the volume-weighted average price. I think I could take another piece off and then just kind of hang out with the rest. If haters didn't hate. Honestly, it gives my channel content, you know. They think they're throwing me off. Really, like, it's better to just have content instead of me sitting here quietly. And so if that content is me shaming the haters, I mean, that's my content for the day. That's all right. All right, so ARM back up to 142 is bouncing back at the lows. We took most of the Datadog off. Not very easy to work around ARM when they hold the intellectual on most top chip platforms, including NVIDIA. Yeah. So they're necessary then. What if CPI traps every bear? I mean, I don't know what CPI is going to do, K. I really don't know. I think we could go up, down, sideways. No idea what CPI is going to do, brother. So, yeah, I hope we come in low. Low typically means positive market reactions. Again, CPI is inflation. OMH up to $7 a share. $7 a share. We're looking at the other earnings that dropped. Moody's came out with a big miss on EPS, 219 versus 232. Revenue of 1.5 billion, came in at 1.48 billion expected. So higher than expected revenue, miss on EPS though, and Moody's is down, I'm sure. Let me see. Datadog all the way up to 118s. Our average price is 113. These are the earnings dips that we take a lot. We didn't take that big of size with this one, but we usually take these type of trades very often, especially during earnings season. It really is one of my favorite parts. Look at OMH breaking $7 a share. $7 a share. Moody's is just not moving at all. It's not very moody today. All right, so again, Datadog all the way up to 120. Right now, 120. You'll love to see it. These happen, look guys, these type of reactions happen all the time. I'm not telling you to buy anything. I don't know what you should do. Again, I just bought it. My average price is 113. But these type of moves happen way more than you might realize. Again, what happens, blue chip stock, big overreaction from earnings. Big overreaction. After we've dropped just such a big percentage, the way I use it in my head is like, okay, I have to consider, hey, is this thing going to keep dropping? Once we drop from 135 down to 110, such a big percentage drop, I think probability-wise, it makes sense to say, okay, we've made the big downward move. Now let's buy it up, right? I'm going to go ahead and get out of it now, too. I'm going to just capitalize on that. A lot of the time, it doesn't hold. So we're going to take our little $20 bill and ride off into the sunset. A slightly richer man. But anyways, once you get these big dips, a lot of the time what's going to happen is this is panic, and then after the panic subsides, you get a nice little rebound. We do this all the time. We did this with Amazon when it dropped big. So again, the key is there's a few conditions that we have for this type of strategy. The first one is that we need to be a blue chip healthy company that people tend to know. Datadog's a pretty big company. The second thing is that it needs to have what I would consider neutral to good earnings. Like, Datadog didn't have the worst results. I think it came in neutral, like mixed results. It wasn't like a huge miss in anything for Datadog. So it dropping from 135 down to 110, was an overreaction, in my opinion. Was an overreaction. All right, so that's the second thing. The third thing is it needs to drop enough to make it worthwhile to buy it, to where the probabilities are in your favor. If you can have all those three things together and you can be patient and wait for them, I love buying these dips. It works really well. I don't like the Dow. Yeah, I'm not a big Dow trader. Datadog almost up to 122s. Is that Baba Risk? I don't know if Risk, again, I don't know if Alibaba is a parent company to AliExpress. I'm not sure. Y'all help me out with that. Do you mean positive? Sean says we are having a positive CPI data today. Do you mean positive in which it comes in higher than expected, or positive in which it's good and it comes in lower than expected? All right, so here's the cue. Again, a lot of this is from Spotify falling down, or Shopify. Again, I don't like Shopify long term. I'm not really a big believer in it. I think most of it is used by drop shippers, and I think that market is incredibly saturated. It's kind of turned into like a guru market of people slanging courses on how to get rich, drop shipping. And I think over time, those type of trends tend to fade out, right? And I think that's bad for Shopify long term. I think it's risky. And so I don't like Shopify. But again, this is certainly one of those perspectives that I could just be wildly wrong about. So again, this is certainly one of those perspectives where I could just be incredibly wrong about Shopify and what it looks like into the future. Because again, I truly just don't know, but I'm just skeptical. I'm a skeptical person. Again, and you guys can hear me, give me the other argument to that. If you're a big Shopify holder, let me know your argument for holding it. Did you hear the ongoing debate amongst traders that do or don't think the Russell price action leads to other indexes? No, I haven't heard that one. I don't even trade the Russell, though. It's mostly small caps. I know it's /YM is the Russell, right? Or no, this is the Dow. Sorry, so /YM is the Dow. What's the Russell? It's like 3 letters, I believe. I can't remember. But yeah, I'm just not a big Russell trader. To me, I'm looking for trends and liquidity. And the Russell is probably one of the worst indexes to day trade in that regard. But again, maybe I'm wrong. I don't know. I just don't really mess with it. What's better than Shopify? Amazon. Amazon's better than Shopify. Objectively. Are you covering CPI? No, man. Listen, we just titled our stream CPI. On the bottom scroller, we say we're going to cover it at 8:30. But yeah, we're not going to cover it, bro. Like, listen, we're going to talk about the Super Bowl, IWM? Okay, yeah. I knew it was some 3-letter symbol. I just couldn't remember what it is. What's CPI, dude? I don't even know what CPI is, bro. Customer project indication? I don't know. Why do you think Shop is better than Amazon? I don't. I think Amazon's better than Shopify. I think Amazon is objectively better than Shopify. I think Shopify is mostly used by drop shippers, and we don't need that anymore because Amazon is so efficient. Most people buy and sell products on Amazon. You can get products shipped same day, where if you order them on Shopify, it's usually going to take some time. So I don't know. I just think Shopify mostly is dependent on drop shippers, and I think the drop shipping sector is going to fade out because trends change and it's saturated. It's turned into a guru market. Sarcasm, top 3 in the world. Yes, obviously sarcasm. We're obviously going to cover CPI today, guys. CPI is the consumer price index. It's the inflation gauge. It's not the one the Fed uses. The Fed uses what's called PCE. The personal consumption expenditure. But CPI is probably the most watched inflation metric we get. It drops once a month. That is today at 8:30 Eastern Standard Time. Hit the subscribe button. We will cover it very quickly today once it's reported. And we will have thousands of people here at 8:30 live in about an hour. Thousands of people here live when it comes out. So again, subscribe if you haven't. Hit the notification bell. I appreciate the love and support. Thanks so much. Again, we will have thousands of people here when it drops. So be ready. Expectations today, as you can see on the bottom of the screen, are 0.2% month over month. It's the consumer price index. Again, Google is your friend. Consumer price index. Kind sir. The consumer price index, just to read Google, is a measure of the average change over time in the prices paid by urban consumers for a market based off market basket of consumer goods and services. Indexes are available for the U.S. in various geographic areas, according to the Bureau of Labor Statistics.gov. Yeah, they're actually scheduling it kind of weird today for CPI. Typically, the procedure of it is that you'll have CPI one day and then PPI the next day. For whoever reason, I don't know if they were, I don't know what the scheduler was doing this week, but CPI is today on Tuesday. Tomorrow we have nothing. Thursday we've got jobless claims, retail sales, durable goods, and a bunch of other stuff. And then Friday is the other side of the inflationary token with PPI. I don't know why they scheduled it the way they did. Maybe earnings implications or something, but for whatever reason they decided to schedule it 3 days apart. CPI is today, PPI is Friday. I don't know why. Again, I really don't know why. Data Dog, all the way up to 124s. I should have. This is why I buy these dips. Is because it's one of the most high probability bounce plays I can ever find. Again, you got to channel Warren Buffett. Better to be fearful when others are greedy, and greed when others are fearful. And so when Data Dog is down to 110s, we got greedy and we bought it up, and we rode it. We sold it at like 122s. A very small trade, but still. The point remains, we take these type of trades a lot. Could profit increase? Maybe. Shopify earnings. Yeah, Shopify's out. What happens if we get core CPI in the 2s? I'm assuming you mean on the year. I mean, if we get core CPI in the 2s, then we are flying up, in my opinion. Expectations for core CPI today is 3.7%. So if we come in at 2 something, that's going to be way better than expected for core CPI. The market's going to fly up, in my opinion. Subjective, I don't know for sure. No idea what I'm talking about. Consumer price index expected at 0.2%. Core CPI expected at 0.3%. Regular CPI year over year expected at 2.9%. And core CPI year over year expected at 3.7%. 3.7. We'll see. Will we keep our prediction streak live? I know gas here in North Carolina was at $2.96 in January, went up to $3.16 in February. Yeah, I mean, gas prices are going up. That's going to be excluded from core, though. Core CPI is excluding food and energy, i.e. gas, right? So it depends. SPY already reacting to CPI negatively? I think the SPY and everything with it is mostly reacting to Shopify. So, again, we can see Shopify here in the middle. They dropped earnings today, and they negatively reacted to it. And then the Q and the SPY both dropped down from that. We also have like other blue chip stocks. Like, you got to understand, Nvidia has been on a surge. So Nvidia, crazy moves over the last 10 days. 10 days ago, it was at $600 essentially for Nvidia. It's now over 700s. We've just had a lot of blue chip movement that is certainly argued to be extended on the upside. I would agree. So who knows what we're going to get in terms of these stocks. I don't know when they're going to start coming back up or down, but I think a lot of them are up a little bit too much. I think it's going to be time for pullbacks. Maybe today. If we do get big pullback days, it could be today. But again, I would agree that we're extended on the upside. I'm not at a point in which I'm buying up anything like that for long-term investing. I think we're way too high. I'm looking for pullbacks now to buy up stuff. All right, guys. So again, Shopify down, Nvidia down at 717. Let's see what Apple's doing today. Apple down as well. A lot of blue chips are down this morning. Maybe this is anticipation of CPI. It's possible. All right, so Michael Saylor said there's 10 years of pent-up demand for Bitcoin ETFs, and now investors are realizing there is 10 times as much demand through ETFs as there is supply from natural sellers. April 19th is when the halving. Very bullish this week, no reason. Hey, good luck. CPI is great and all, but can we talk about the new Twisters movie? Hey, bro, my daughter and I watched that commercial, that trailer for it. Got so excited. Again, I grew up on the movie Twisters. All right, I had a deep-seated psychological fear of tornadoes. Completely unrealistic fear. But hey, I was scared of tornadoes all my life. But it's kind of like one of those things where I'm scared of them. And so I'm kind of like also super interested in them because, they seem like such a powerful thing. I was really into tornadoes and stuff like that as a kid. My 3 obsessions as a kid were sharks, snakes, and tornadoes. As a child. Had pet snakes. I asked my parents for a shark one year. Didn't work out. What they did technically get, my parents found a loophole in this, right? Instead of getting me like a real shark, my parents got me one of these things. I guess it's technically a shark. My parents said, hey, you want a shark? Here you go. A shark. Man, I was just a tough kid, bro. Just completely unrealistic. Maybe that's where my son gets it from. Sharknado. Hey, listen. I would have loved that movie as a kid. I prefer a hurricane. I don't, man. I'm from Louisiana. I certainly don't like hurricanes. The hurricanes took out my favorite car I ever had. Here's a story. I had a 1997 5-speed Honda Prelude with VTEC in it. I love that car. It was fast. Everybody thought it had a turbo in it because I would put it up to right where VTEC kicked in and I would floor it. And I had a cold air intake, so it kind of sounded like a blow-off valve. And so people that didn't have any idea about cars thought that I had a turbo. And it was surprisingly quick for the time. At this point in time, a Tesla truck will beat it, but it'll beat most things. But anyways, that was my favorite car at the time. I used to race it. We brought it to the track. Like, we did all this fun stuff with it. Anyways, one year, I think it was Gustav. I don't know if it was Katrina. I don't think it was Katrina. I think it was Gustav. And I'm from Baton Rouge, right? And I have family in New Orleans that would always come and stay at our house whenever we had hurricanes because New Orleans was going to flood or whatever. Anyways, my dad was like, yo, do not leave this house. Do not leave this house. A hurricane's coming. But I was like 19, 18. I was a kid. Still not a kid, but like I was a young, dumb teenager. And so I leave the house and I end up going party out in central Louisiana at some friend's house at the time. And, doing a bunch of dumb stuff. By 5 a.m. the next morning, what happened? This is what happened. I was going to my friend Kareem's house, and driving, he was like, yo, do not go down my street. It's flooded, right? So I'm in my Honda Prelude, and I look down the street. And granted, my mind might not have been at the, let me think of the most delicate way to put this. I might not have been thinking the clearest at 5 a.m. the next morning in the middle of a hurricane. And so I started to go down his street anyway, and it looked fine. The water started to get to my headlights. And so I don't know why, but I opened the door of my car, and water just gushed into my car, like completely destroyed the car. I ended up having to get out and literally swim to my friend Kareem's front door. And so, of course, they're laughing, and they also feel kind of bad. But, we ended up rebuilding the motor, and the car was just never the same. It was never as fast as it once was. And fast to me at the time was like 14.5 quarter mile. But, yeah, that was my favorite car ever. Gone. Never really was the same after that. So, yeah, I don't like hurricanes. Hey, they did warn me. Listen, I can't get mad at them. They can laugh. It's a fun memory, I guess is the best way to put it. I just wish my favorite car ever. Most people from Louisiana don't like hurricanes, though, because a tornado is super rare. Hurricanes flooding is what we don't like. Like, flooding gets really rough in Louisiana. Anyways, ARM's still pulling back. So ARM is at 137.80s. 137.80. So ARM, still a struggle here. Still a struggle. I believe it's right around 12 seconds. 11.5 to 12 seconds. Sam. Again, please don't say what the car is. I'm not going to, even if you guys guess it, I'm not going to tell you. Oh, the 0 to 60. I'm sorry. I thought you meant the quarter mile. The 0 to 60 is, let me look. The 0 to 60 is 3.8 seconds. 3.8 seconds. But again, please don't say what it is. I'd rather people, yeah. I'm a big JDM guy. So, I used to soup up my cars and, have fun with them. This was back, again, it's what's a little bit depressing about the EV, the surge in EV cars is that they're so fast. It's almost not even worth it, right? You go race, you can soup up, throw a twin turbo on whatever JDM you want, and you're going to get beat by a stock Tesla, a stock Cybertruck, a stock Rivian. It's almost not even worth it to do it anymore. It's disappointing, but it is the future of tech. I know there was an old street racing video where the dude, where he got rid of all the weight in his Tesla, and that thing was beating everything. It would be drag cars, it would beat everything. And so it's almost disappointing, that market. Nvidia's starting to push back up. It's almost up to 720. What is the effect of CPI on crypto markets? Crypto typically follows stocks on a macro level. Micro level, we don't know. We don't know how it's going to respond. It just depends on what the results are going to be. Yeah, gutted Tesla just destroys whatever. It's disappointing. CPI drops at 8:30. It might be in the title. Oh, no, it actually isn't in the title. It might be right here below me. Yeah. Sorry. Went to school to become a motorcycle mechanic. Even my Harley goes fast. Yeah, for sure. I would get a motorcycle. My wife pressures me not to. I mean, I do whatever I want to do, but happy wife, happy life. She had a friend that, had some bad stuff happen in a four-wheeler and motorcycle. Four-wheelers were, or I think it was a three-wheeler. Three-wheelers were sketchy. Three-wheelers are super sketchy. Four-wheelers are a little bit safer. Barstool Sports and DraftKings are teaming up in a partnership. I would buy DraftKings. It's just up so much over the last like 20 days. 20 days ago, DraftKings was at $32.39. DraftKings is essentially up 35% in the last 20 days of stock price. That's up too much for me to really want to buy DraftKings. I know it's the Super Bowl, and typically every year around this period of time it gets a big bump, but it's up too much. Like DraftKings, when we look at it here, it's just up too much. I'm not trying to buy it. I'll wait, and if we do get a dip from CPI, I'll buy up some stuff there. Yeah, I mean, it's my choice as well. I'm going to do whatever I want to do, but, you know, I don't have a ton of experience driving motorcycles. I used to have like it was like a 1978 GT80 dirt bike, mini bike, that I used to drive around my neighborhood as like a 13-year-old kid, you know. This was back in the 90s. And so I know how to drive that, but I understand also that motorcycles are a little bit heavier. But I'm pretty sure it's like riding a bike. I'm pretty sure I would know how to ride it, but yeah. What do you think about Robinhood? I'm torn on Robinhood. I think Robinhood's a big name. I think they lost the trust of retail. But I also think that you still have a ton of people that use them regularly. So Robinhood's a tricky one. I guess I'm neutral in it. I think it has the chance to have a big gain and a big success long term. I think Robinhood's mistake, and the reason they're still so cheap like this, is because they started putting out the advanced aspect of their platform too late. I was telling people years ago that Robinhood needed to drop an advanced platform, because what's going to happen, and what's been happening for years with Robinhood, is that new traders use them when they don't know any better, right? They get started, they use Robinhood, it's simple, it's easy, new traders love it. Traders don't stay new for forever, though. Eventually, they want to grow and they want to get a better platform. And once that happens, they leave Robinhood in droves, right? And so Robinhood recently, over the last year, put out an advanced platform. But I think it's a little bit too late, in my opinion, for it. I think they should have done that 3, 4, 5 years ago instead of in 22 or 23. And so I think that was a big mistake that certainly halted their growth a little bit. And I think they could have been a lot stronger of a company by now if they did that. But again, I'm pretty neutral. I think a lot of people still use them. But I also think that retail kind of turned on them to a certain extent after the AMC. I think people realize that they kind of side with big money in that regard. And so I think people don't trust them. How does gold perform against dollars? Gold typically moves inversely to the dollar. So if you look at the Dixie and you look at gold today, they kind of do the opposite of each other, I think. Or no, maybe they move with each other. Let me see. I don't really watch the correlation with the gold. I know the equities market and the dollar index move inversely to each other. But I guess gold being on the other side of that as an inflation hedge could move with the dollar. I'm just not sure. Gold is up on the day. The dollar is down on the day. So I think, yeah, that might be right, where they move inversely to each other. Chat, you guys answered that a little bit better. Baba, I'm in Baba right now. What's it doing? Is it up? No, it's not. It's all right. I think Baba's cheap enough where I could buy it, and Baba's still a very large. You have to understand that Alibaba feeds Amazon. Okay, what I mean by that is that what Alibaba is, it's a wholesaling platform. So I could get exposure to sellers overseas that are wholesaling products. Again, yoga mats is what I always go to. I could say, hey, I want to start a yoga mat company. I could go to Alibaba and be like, yo, I want to buy 1,000 yoga mats, and I want you to stamp my logo on them, and I'll pay you $3 a piece if I buy 1,000 of them. And so Alibaba say, okay, sure. We'd make the deal or whatever. They'd send me my yoga mats, and then I could take the same yoga mats and slap them on Amazon for $20 a piece and have great margins, right? Amazon's going to take their cut, but that is where, if you want to know who supplies the products that you buy on Amazon, that is what happens a lot of the time. A lot of the time, the product you're buying on Amazon only costs a couple dollars when you're paying $20-$30 for it, and most of the time, those sellers get the products from Alibaba, right? So Alibaba feeds and pushes Amazon. And so with Amazon becoming so big, Alibaba is pretty big as well in that way. And so I think they're going to have some longevity. And I think when they dip down to 70s, the only problem and the only question mark is the government over there. Like there's been a lot of controversy with that type of stuff over the last 5-6 years with Jack Ma and the government. And like they don't like him and he doesn't like them. And so he disappears and all this crazy stuff happened. And so that's one of the things that makes me not like it as much. I think it's a little bit more unstable because of that. And it's definitely a little bit harder to predict. But I think Alibaba is still a very strong company. So I'll take a small share size, but it's not going to be huge. Inverse. Okay, gotcha. Robinhood rips you off on every trade. Yeah, but I mean, in what way though? Pop culture? Are you talking about PFOF? If you're talking about PFOF, I hate to break this to you, but every major stock platform does it. And I'm not even mad at that, man. Again, that's just like really the people who are the most upset are people that are still holding, or people that lost money on AMC and GameStop are the ones that are super upset with PFOF. Again, though, I disagree. And it's okay if you disagree with me here. Please don't hate me because I take the other side of that. But I've been around trading long enough to where I remember it before PFOF. I remember before payment for order flow was a big thing. And again, it was incredibly expensive to day trade. Incredibly expensive. Thinkorswim used to have $14 round trip commissions. Anytime I would take a trade, it cost at least like $15 basically. To take one trade. I could buy one share, it'd be $15. I could buy 1,000 shares, it'd be $15. I would rather pay for payment for, I would rather allow them to take it on the back end of that instead of having to pay super high commissions, because I've been around long enough to where I remember when all these major stock exchange platforms charged commissions, and it was very expensive to trade. And so I'm not against payment for order flow like a lot of people are. I think that it's incredibly expensive without it, and I would rather them take half a cent off a transaction and make their money however they're making it versus, paying those super high commission rates. Yeah, I mean, they were definitely sketchy in that way, Jared, 100%. He said to make it so you can't click the buy button. That is my issue, 100%. I mean, I agree. That was sketch, for sure. You and Shopify? No, I don't like Shopify. I don't trust Shopify. I think it's mostly drop shippers. And I think that market is fading. Yeah, you don't really hear about, like, again, the people that are the most upset are people who, and again, it's a tale as old as time, all right? What happens is you got people who get sold on a stock. Usually it's almost never a blue chip company. It's almost always a really speculative small cap company, penny stock or whatever. They get sold on it. They buy the hype. They buy the marketing. Probably they got a bunch of other people that are saying, yeah, this is the greatest stock ever. It's going to be the next Amazon or whatever they say. They spend their life savings investing in a super risky, super speculative stock, which is a terrible financial decision. And then when said stock doesn't work out, right, they blame all these different shadowy figures when the reality of it is you saw it a lot with MMAT, right? MMAT, not a successful company, had a huge following of traders that just acted like it was the future. And then when it didn't work out, nobody cries manipulation more than somebody that's been holding a wildly depreciating asset. And so I think you got to understand, if you buy up super speculative penny stock companies or meme stocks, number one, you got to just be ready to lose. And because of that, you should never spend your life savings on any of it. Now, at the same time, before people get their pitchforks out, I also agree that Robinhood specifically was incredibly sketchy during 2021 in AMC and GameStop. I think they halted GameStop when they shouldn't have. I think they sided with the big banks, unfortunately, in that period of time, and that hurt a lot of people. And I have sympathy for that. I think that they were really sketchy in that period of time. Honestly, outside of that, I kind of like Robinhood as a company. I think a lot of traders use it, but I can't really find myself investing into it because of that. I can't really support that type of behavior. So, CPI is at 8:30 Eastern Standard Time. We got about 40, 50 minutes left. Yeah, I mean, I think Robinhood, again, the problem is that the charting sucks on Robinhood. Like, that's just an obvious thing. The charting's not good. What is good about Robinhood is the options trading. The options UI, very nice, very good, very solid. Great UI for options. I actually prefer to trade options on Robinhood, but I don't. But I actually like trading options on Robinhood more than other options platforms for the big boys. But yeah, again, Robinhood just betrayed the trust of retail in that way, acted incredibly sketchy, and it's been hard for them to regain a good reputation since. So, I don't know. I'm neutral on them. Yeah, y'all join our Discord. It's completely free. Doesn't cost anything. What happens if CPI is greater than forecasted gold? Gold will probably drop if CPI is high, but we don't know for sure. Yeah, there's a lot of good platforms. I trade mostly options. Seems a lot easier than Webull, but I'm getting more used to Top Step. Yeah, Top Step's great. If you want to day trade, guys, again, you don't have to go to these other platforms we're talking about. There's no PDT rule in futures, and so I can essentially day trade the SPY in futures in what's called the E-mini. You can see the E-mini price action here, and again, it's moving exactly the same as the SPY. Like if I put these next to each other, it's literally the same price action. Actually, this is an hourly chart, so let me put a minute chart up. But yeah, if I put this next to each other, you can see it's literally the same price action. Like look. This is the same as this. There's just no PDT rule in this middle one. You can day trade short in futures. I can buy market, sell market, all that good stuff. No PDT rule. And Top Step is the most legit futures funded program in the world. Before we look at this, remember, I am terrible at this stuff. Have no idea what I'm talking about. Might be wildly wrong about anything and everything I say. All right, so just understand, not an investment professional. We're not liable if you lose. Anyways. Top Step, what they do is they give you a demo and they test your skill. And if you could pass the test, great. If you can't pass the test, you're most likely going to save money. Because if you put up thousands of dollars yourself trying to day trade, most day traders lose. And so it makes no sense, especially if you're in the beginning, to put up thousands of dollars yourself trying to look cool. Instead, try a funded account program. Again, you can day trade essentially the Q price action of what's called the NASDAQ, essentially the S&P SPY price action of what's called the E-mini. The SPY actually tracks the futures contract of the S&P 500. The E-mini is what the SPY tracks. And you can day trade the E-mini in futures, no PDT rule. Once you're funded on Top Step, if you can pass the test, you get a 90% split anyway. And so it's the best of both worlds. If you lose, you're only out. The base one's $50, the top one's $150. But if you pass it, you get a 90% split, all that good stuff. Free funding coaches. They've been around for over a decade. They pay out millions and fund thousands of traders a year. You can check it out at this link. Again, they're a sponsor of mine. I'm certainly biased, though, of course, because they pay me money. You know, I'm biased in their favor as a sponsor of mine. Anyway, so yeah, Bob is still dipping down a little bit. We do have the E-mini trying to bounce. Again, we can look at the Q here. Tesla is also down on the day. There's the Q, there's the SPY, there's NVIDIA on the left side. Anything else that's worthwhile looking at in blue chips? NVIDIA trying to come back on the day, though. ARM is also a really interesting one. I'm also in Palantir. What is it doing today? I haven't looked at it. Okay. Palantir's still right around the highs. It broke highs yesterday at 25.50s. Still looking really solid. Oh, actually, Beach Bum might be right. So look, Beach Bum might be correct. I mean, gold typically viewed as a hedge against inflation, higher CPI, and inflation equals higher gold and silver. I didn't know that. I didn't know how gold moved relative to the S&P 500. So in that regard, it moves inversely to the S&P 500, basically. Yeah, Top Step is international. You want to check with them to make sure you can use them, though. But yeah, they're international for the most part. I don't know. I'm in Palantir. I hope it doesn't fall at all, but who knows? I would watch $24. Has been a pretty big support level over the last 3 days, but I'm not sure. All right, we got about 800 people here live. We still got 45 minutes until these numbers drop. U.S. Senate passes a $95 billion package. This is probably one of the most true memes I've ever seen, dude. Honestly, it's really bad with pilots. You know, pilots, I get it, kind of. But I used to manage employee benefits for United Airlines. So I'd manage like their insurance stuff and all this stuff. Bro, when your PhD is in education, social science, and honorary, excuse me, it's doctor. If it's in astrophysics, biomedical, or applied mathematics, call me Bob. 100% true. Real doctors don't insist on being called doctors, you know. I almost never hear a real doctor do that, like an actual doctor, like somebody that actually is a doctor. Again, I'm not even mad. I mean, listen, if I worked that hard for something, I guess I might insist on people calling me doctor. It depends, though. I'm not going to get mad at them if they don't. I think that's silly. But anyways, going back to pilots. Nobody, like pilots, if you could call them sir, they say it's captain. Like, I felt like I was in the Pirates of the Caribbean movie every time I had to deal with a pilot, you know? Who do you think is going to win the World Series? It's way too early to tell, brother. The real question is somebody going to pick up Trevor Bauer? That's the real question. I don't know. Honestly, I think they did Bauer dirty, bro. Like, okay, Fernando Tatis doesn't like Bauer. He's never liked Bauer. And so one of Fernando Tatis's exes is the one that came out saying that stuff about Bauer, right? And so then Bauer gets completely booted out of the league. Teams refuse to sign him. They do an investigation. All charges are dropped against Bauer. You know, they even had a picture of the girl the next morning smiling and happy, right? And then they come out with weird stuff. The whole thing was just super sketchy against Bauer. And he basically has gotten blackballed from the industry now. And I wasn't even a big fan of him as a pitcher. He was all right. He had a low ERA. But I thought they did him dirty, you know. I didn't think they I thought the whole thing was kind of sketchy. SoFi? Yeah, I'm in SoFi right now as well. I'm slightly down in it, though. What will happen to the market if CPI report comes in as expected? That's impossible to tell. We don't know for sure. Yeah, we'll see. Nope, I work with doctors and they never act that way. Yeah. I can't even get mad. Again, if I worked, I might insist on being called Doc too, but. Dr. Dre, the GOAT. All right, so ARM's still moving back. Again, a lot of the market is weak right now. Look at NVIDIA on the left side. So NVIDIA under 720s. Look at the SPY at 499s. So it's trying to hold, but. Oh, 100%. I think he went after him because he spoke about sticky substances on baseballs. Bauer was always very outspoken regarding how pitchers were using sticky stuff. And if you don't know baseball, right, if you use like pine tar when you're pitching, it increases the spin rate of the ball, allows you to throw faster and have more curve. And it's something that pitchers have been doing for almost a century now. But it technically is against the rules, but everybody's been doing it for a century now. Bauer was outspoken against it, and then after a few seasons, you saw Bauer's spin rate go up drastically. And so everybody realized he was starting to use it, and then afterwards they came out with rules. Now they're checking players. It's just a weird situation. And there's a lot of reasons that the commissioner didn't like Bauer. Shopify earnings are already out. SoFi, I'm in SoFi. I hope it goes up. It doesn't have the biggest range is the only critique I have towards it. And it is still a new company. You know, like I think a big mistake that a lot of traders make is that they invest in speculative mid caps like SoFi, like they're blue chips. You know, and I'm in SoFi. I want it to go up. I don't think you should put your life savings in something like this, though. I think this is a speculative company that I hope goes up, but who knows if it will. And high risk, high reward is essentially what it is. You know, you get a lot of new traders that don't have that much money, right? And so when they're looking around for stocks to buy, they can't really afford a lot of blue chip stocks, and so they end up investing in these kind of speculative mid cap stocks. The problem with a lot of these, though, is that mid caps can drop 50% in a year. You know, they can be incredibly volatile, and a lot of these companies are overhyped. Like, a lot of mid caps specifically are overhyped. I don't think SoFi is necessarily, that's why I bought it. I like SoFi. So I'm not talking about SoFi, but a lot of mid caps outside of this are overhyped, and people end up investing in them like they're Amazon and sitting on them, and then they're down 50, 60% in a year, and they don't know what they're doing wrong, and they end up never investing or trading again because of that, right? So I think you have to understand blue chip stocks, legacy companies are the best move. Even if you buy 1 share, 2 shares, 5 shares, whatever, it's going to be better to invest in those type of companies long term than to invest in speculative new companies that have been around less than 5 years. And so I think that's the mindset traders have to have in regards to investing, because I think a lot of people have small accounts and they think that they can't afford, Apple, Amazon, Google, Walmart, or whatever it is. But again, you're going to get the same type of returns with small shares that you do with large shares. It's just going to be less, percentage wise. It's just, you're going to make a little bit less, and that's okay. I guess my point is, if you have a small account, you don't have to invest in penny stocks. Like, you don't have to invest in mid caps. And I think that's a big mistake a lot of new investors and traders make, because they treat these like they're Amazon and Apple, and they're just not. Anyways, I think the dollar will fall today. If the dollar falls, the market's going to move up, Reki. Usually the market moves inversely to the dollar. So if the dollar and the Dixie move down, the market's going to move up and vice versa. So again, basically by betting the dollar is going to go down, you're betting the market's going to go up. Eli Lilly, yeah, a lot of, I believe easy. I think those are powerful right now. SoFi is supposed to drop some news, post on their X today. Coca-Cola earnings. Yeah, I'm in KO right now. What is it doing? I haven't looked at it. All right, so yeah, I'm up. I'm up decently on it. It's up to over 60, so that's good. We're getting a lot of drops though ahead of CPI, and we got like 35, 40 minutes left until CPI drops. SOUN. Yeah, no, SOUN is really hyped. Again, guys, we got CPI, the Consumer Price Index, dropping in 35 minutes, a little bit less than 35 minutes here. This is the biggest inflation report that we get month to month. Again, the Fed prefers to use PCE inflation, but again, it's virtually the same thing. There's subtle differences, but again, CPI is looking at consumer data. You want to know the big difference between CPI and PCE? CPI is specifically looking at consumer data versus PCE, which is looking at businesses in the purpose of consumption. And so, or the source of the data is from businesses, is what I mean for PCE. And so CPI, again, the single most watched morning metric that we get. So in terms of metrics that we get in the morning, CPI is certainly the largest metric. It's typically the one that we have the most people show up for. And it also causes a very big reaction normally in markets. Again, we don't know what we're going to get. We'll see if we get up or down. Let me know in chat right now. Do you think we're going to go up or down from this report? Do you think CPI is going to come in high or low? Right, high or low, depending on what you think it's going to show up as. You can also vote on our poll. The CPI come in high or low. 47% say high, 39% say low, 15% say, I don't know, bars. If you don't get the joke there, culture yourself. Neutral. Anyone is gold going to crash up or down? I don't know. Up, neutral, higher, up. Market doesn't seem to be afraid. Low, month over month, 4%. Nah, that's way too high. Maybe, I don't know. Gold will go up or down. No idea. Impossible to tell. Unless you're a big bank and have insider knowledge. Low, down, low, so we buy. Yeah, so again, I'm kind of confusing myself here, or probably confusing the chat as well. Listen, chat, do you think CPI will come in high or low? Low is better. High is worse, of course. I think it will go down. Low, low, low. So low is better. High is worse. Again, low means lower prices, essentially is what it means. Consumer price index is how much we're paying for stuff. Low means we're paying less, which is optimistic and good for markets. High means we're paying more, which is pessimistic and bad for markets. The SPY is starting to bounce back, though. It's at the volume weighted average price. Again, look at NVIDIA over 720s. Over 720s. Look at the SPY bounce back over the volume weighted average price. The Q's still far down there, but we are starting to get some bounce backs. And we got about 1,000 people here live already. Still got over 30 minutes left. Again, I don't even know if I want to make a prediction. I guess I probably will. I'm going to do it a little bit closer. So the last 4 CPI reports in a row, I've gotten it right. And to be honest, I'm a little bit hesitant to even make a prediction. I don't want to ruin my streak, bro. I got to be optimistic. We're going to get it right again. We're going to put this out into the universe. We're going to guess CPI exactly right. Not an investment professional. If I'm wrong, don't copy me. No idea what I'm talking about. It's coming in low, bro. Look at market manipulation down, so we go up. It's telling the future if it rides, it's probably going to go down. Maybe. CPI low, market up. You can tell who has puts and calls by the answers. Are futures harder to trade than options? Harder is subjective, Caesar. So, you know, that's kind of like asking, hey, is baseball harder than football? Baseball is objectively harder, in my opinion, but so maybe that's not the best argument. Point is, it's subjective. I would say futures are easier to trade than options. There's less nuance behind them. Futures are more similar to day trading stocks than options are. Like, you can day trade futures, and you can day trade the S&P, the NASDAQ, gold, currencies, all that good stuff. Patterns are going to be very similar to day trading stocks. There's just no PDT rule in futures, so you can day trade short, all that good stuff. The sizing is different in futures, and when you hear contracts, you might think of options. It's not the same as options. Like futures contracts, futures were originally created. Farmers would grow crops, and farmers were unhappy because they would grow crops. By the time it came to yield those crops, the prices had fluctuated so much that their margins sucked. Basically, what they started doing is they started selling contracts to speculative investors, locking in the price of the crops they were growing. Before they would yield the crops, they would sell contracts, locking in the price, so they know how much money. So they knew how much money they were going to make when it came time to yield those crops. Even if they lost money from big increases or whatever, it was still more consistent and better for business. And they called these contracts futures contracts because they were betting on the future price of a commodity. Well, at this point in time, the futures market has evolved well past just base commodities. Like, we can now trade, again, the S&P, the NASDAQ, currencies, gold, commodities, of course, and there's no PDT rule. So it gets around the PDT rule. It makes it so you don't need that much money. Top Step, again, the most legit futures funded program in the world. And so, yeah, Top Step's the most legit futures program in the world. They're a sponsor of mine, so I'm biased, and you want to vet out all of this with them and check with them. What they do is they give you a demo and they test your skill in futures. And so if you want to try out the futures market, Top Step base combine's $49. If you lose, you're only out $49. They're going to give you a demo, test your skill. If you can pass the test, the base one, I think you got to make $3K without losing $2K. So a 2 to 3 ratio, very reasonable. If you can pass that, they fund you $50K with a 90% split, as long as you follow their rules. And so, again, you're keeping 90% once you're funded. Anyway, they pay out millions every year. They fund thousands a year. They've been around for over a decade. Free funding coaches, tons of great resources. And just taking the challenge builds your skill. But, again, if you lose, it's not the end of the world. You're out $50. When I first got started day trading, I lost like $4,000 in a couple weeks. And so this is a much cheaper way. I wish I had something like this when I got started. But I don't know. We have a link. You can use the link right there. Check it out. No Greeks in the futures market. D4. The previous CPI report showed up as 0.3%. 0.3%. Today they're expecting 0.2%. 0.2. I'm going to make my bet at 0.2%. I'm going to go with as expected at 0.2%. Losing 4K is pennies compared to a lot of traders started out. Yeah, I mean, to me, it wasn't pennies, though. This was back in like 2016, right? So in 2016, I was running a used book business from home. It's where we got all these books, to be honest. So you want to know where this library came from. You can't really see the library, but back we were running a book business at the time. The book business was actually pretty profitable. It doesn't really work anymore, though, unfortunately. But we used to go to Goodwills and thrift shops and Salvation Army, and we had a Bluetooth barcode scanner that I programmed to like jingle if a book was being sold on Amazon for $20 or more, right? The lowest price it sold on Amazon was $20 or more, and these thrift shops sell books for like 50 cents. And so I programmed it to jingle if a book was worth over $20 on Amazon. And I would just go through the whole bookstore and scan. And if I heard ding, 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 I would take the book, throw it in the cart, and then just kind of go through. I'd buy I'd get a bunch of books, sell them for great margins, and made thousands of dollars a month doing it. But still, I wasn't making nearly as what I'm making now. And so $4,000 to me at the time was so much money. Carol was against it. She pressured me not to trade. It all worked out for the best, though, because if I would have never done that, I might not be here where I am now, right? So Carol was super against it, told me not to do it. And then I was like, I thought I was going to be some get-rich guru in the markets, and it was going to ride off into the sunset, showing everybody how smart I was. I think that's every day trader in the beginning's dream. And I think a lot of people that are struggling financially, that's like a pleasant dream, to have. It's not the most realistic dream. Almost all day traders lose money. But, that was my dream at the time. I ended up day trading on a platform called SureTrader, which gave me like 6-to-1 leverage and, didn't have the PDT rule, and I was day trading stocks. And yeah, it's just super sketchy platform in hindsight. SureTrader, Guy Gentile's platform, DOS, same people behind DOS. And yeah, I lost that money within like a couple weeks. Almost cried afterwards. I remember sitting there having kind of like a talk with my wife about it, being like, man, I lost all this money. How terrible is this? If Carol wasn't there, I might have cried, realistically. Anyway, it worked out for the best. I started this channel, uploaded the trades, and then that happened, and I stopped uploading for like a year. Eventually, though, I started to grow subscribers based off of the previous videos. And the whole idea for the channel was like, hey, I was looking out at the landscape of social media at the time, and everybody was a freaking day trading guru, and I just didn't want to be that. And so I was like, hey, I'm going to call myself beginner trading because we're the anti-guru, and so now here we are 6 or however many years later, and yeah, business works well. We are on YouTube. We got 1,200 people here now watching live, and so hey, it worked out for the best. If I wouldn't have lost that money, I might not be here. Hey, thank you, Tobian. You make it back when you start using, yeah. Yeah, crypto, man, it happens. Starting out, I lost more than 100,000. Oof, 370 when I first started day trading. I blame the culture of day trading, though, man. I really blame the culture. Again, I've had people that have worked with me before, right? I've had people join my channel, and they don't really understand my channel. I think everybody wants to be a day trading guru, and I think the Dunning-Kruger effect in trading is super profound, right? But what ends up happening is that everybody rushes to be a guru in this sector, to where I've had people that have joined my channel, been like, yo, thank you so much. I'm brand new. I only started day trading and trading in the market, a couple weeks ago, and you've helped me a ton. Thank you so much. Eventually, that person will like work as a mod in my channel. I remember I let him work as a mod in my channel, and like I think it got to his head a little bit, bro. Within like a month or two, this dude was telling everybody that he made 50K a day and that he had 30 years or 20 years of trading experience. And I'm just sitting there like, dude, what happened? You started trading like a month ago. You had never traded before. Now all of a sudden you're making 50K a day or 50K a month, and you've been day trading for 20 years. Like, come on now. Like, I don't want that. Like, that's not what my channel's about. And, but I think people rush into that stuff. And I think that is to blame for people having unrealistic expectations for it. I'd rather be real, tell people I'm not an expert, not even claim to be a good trader, report free economic data, and cover stock market and futures news over everything else. And, I think that allows me to still have a good business but sleep good at night as well, right? I think that makes the most sense out of everything else. I'm sure I could make more putting out unrealistic expectations and all that stuff. But that's just not really what I'm about, you know. CPI is going to negatively affect the market if it's higher, most likely. It's never a for sure thing. You never really know exactly what it's going to do. But CPI higher than expected is bad. Lower than expected is good. And so it depends on if it's higher or lower than expected. Lower than expected signals lower consumer prices, which is objectively good for us. As consumers, we want lower prices. And lower prices is more optimistic regarding when we're going to start cutting rates and all that good stuff. Today's decision might affect when the Fed chooses to cut rates. Most people are expecting it to be May. And if we look at the CME watch tool here, here's the March expectation. So in March, everybody is still expecting a pause in rates. We're not expecting rates. We're not raising rates. We're not cutting rates. We're expecting a pause in the federal funds rate. 15.5% of people, though, are expecting a 25 basis point cut. I don't think we do, but this CPI report is going to influence these numbers. You know, most people are expecting May. If you look at May, this is when a majority of people are expecting a 25 basis point cut. We got about 8% of people expecting a 50 basis point cut, and about still almost half people expecting a continued pause. I think based off of what Powell said last time, it is possible that we don't raise rates in May, or that we don't cut rates in May, that we sustain the current pause in rate hikes and rate decisions in the federal funds rate, that we do sustain that for an extended period of time. I think it really depends on, again, what inflation shows up as. If inflation shows up higher than expected today, that might signal less of a need to cut rates, more sustained pauses in rates. If inflation comes in low today, that might be an argument for earlier rate cuts in March potentially, or maybe might improve the probabilities of a May cut. Again, let me know when you guys think, when are we going to cut rates? That's a really good question, I think, based on the economy. When do you think we're going to cut rates? I think it's going to be in May, but it depends on what this data shows up as, to be honest. SPY's still trying to break over. We are getting a bounce back. We still got 20 plus minutes left. CPI is expected at 0.2%. Just a weather, man, you know, right around this area right here, it says. Let's see what we get today, guys. Let's see what we get today. Looking at our poll numbers here. All right, so CPI drops soon. Does it come in higher or lower? We got a poll on Twitter now as well. CPI data going live, guys. We got about 1,400 people here live, 1,400 people. We still got 20 minutes left until this data comes out. A bit later in the year, I think Gary was convincing the audience that the market conditions aren't still so good to start lowering rates. Yeah, I mean, basically what Powell said in the last meeting was that he essentially said that the economy and that inflation isn't a for sure thing to be under control. Like that, essentially inflation is not guaranteed to be under control this year, that we still see risks to inflation, that we're certainly not in a soft landing period for sure, and that it's still speculative, and that it's still possible that we do see spikes in inflation that would cause us to sustain the current economic, pause in rate hikes and pause in the federal funds rate. So basically what he's saying is that it's not a for sure thing that we're out of this, that there's still risks. Now his job is to be balanced, and I think when he sees kind of like a mania of optimism, his job is to kind of bump it back down a little bit. But again, it's going to depend on CPI. It's going to depend on PCE and all that good stuff. We got NVIDIA still testing those levels. CPI high means bullish. No, low means bullish. Again, CPI is inflation. Lower inflation is better. Higher inflation is worse. All right, let's look at the poll again. 46% say high, 40% say low, 14% say I don't know. Soy and corn has the biggest price drop in 15 years. What's going up, inflation or the market? Notorious. Do you think the higher CPI will be a catalyst for the Bitcoin correction? If we come in high, it could potentially spark a Bitcoin correction. I'm not really sure, though. And again, I'm going to start to kind of liquidate some of these positions. You know, I'm in Amex right now. My average price is 144. Amex is at 211. So I'm going to go in and get out of the rest. All right, so we're out of that for Amex. We are also in Citigroup. My average price is 42s. We're at 53s. I'm going to take a little bit off of this as well. Ahead of this. What else we got? We're in Delta. Delta's a little bit more speculative. Disney is at 110s basically. Take a little bit more off of Disney here. All right. Home Depot. I'll hold Home Depot. Honeywell. I'll hold Honeywell. Coca-Cola. It's a small trade. I'm just going to keep holding Coca-Cola. MGM, we're up in that one. Nike, we're green in that one. Oracle, we're green. Snapchat, we're green. So far, we're green. Okay, I'm probably just going to hold the rest. We're in Exxon as well. We're green. All right, guys. Hey, we got 15 minutes. We got 1,500 people here live. I already said I think we're going to come in at 0.2%. I'm going to go with as expected. But again, I'm not 100% sure. This is just purely a guess. But I'm going to go with 0.2%. Again, let me know your predictions right now. Coca-Cola testing highs, ARM moving up a little bit. What's your prediction for CPI, guys? What numbers are going to show up as 0.3%? This is TOS, Thinkorswim, 0.3%. Again, put your predictions out in chat, team. Let me know. .9% on the month. I mean, y'all are giving me the yearly perspective, 2.9%. It doesn't come in percentages like that smart. It's going to come in to the nearest tenth of a decimal. To the nearest tenth of a percent. 0.3%, 0.5%, 0.2%, 0%, 5%, no change, nothing, 2.6%, 2.5 to 2.8%. Year over year, more important, I think. If we finally see under 3%, 2.9% would be bullish. The big one, I mean, they're both important. Year over year and month over month are still pretty important for inflation. But yeah, it's up to you guys. What do you guys think? 0.4 month over month, 3.9% year over year. Maybe. That's certainly possible. I mean, that's within reason. No change. Gold will sell. NASDAQ all-time highs. And real life CPI ain't real. Yeah, all good, brother. All good. And silver, bring it down. Where's silver at? Silver is SI. Silver's up today a lot. What is gold? Gold is up a lot today, too. ARM starting to move back up. I don't know if I should take my profit in ARM or what, though. I guess I'm just going to sit in ARM. All right, guys, here we go. Inflation data, 14 minutes here, 14 minutes. Again, we get thousands of people here live because we cover this very quickly. We cover this very quickly relative to others. And so if you haven't already subscribed, hit the notification bell. I appreciate it. Thanks so much. Let's keep growing here, team. Keep growing. We got 1,600 plus people here, almost 2,000 people here live. Let's do this. 13 minutes. Again, hit the live button next to the play button. You could also put it in fast forward mode, and it shouldn't affect how I speak very much, but it also should keep you up completely live on stream. And so again, hit the live button next to the play button. I'm going to go with 0.2%, 7.5 is my prediction. But again, it's purely a prediction. Honestly, I didn't even want to make a prediction today because, again, the last 4 CPI reports in a row, I think I've gotten exactly right. I also got jobless claims right on Thursday with 218, which was not what was expected either. So I've been on a roll. I don't really want to break my win streak. I'll probably make a short based off of all my old predictions, even if I get this one wrong. But yeah, I wanted to make a short based off of it prior to the report, but it's all good, man. It's all good. CPI affects all like the economy and markets in general, Mike. He said, can you tell me if CPI is connected with crypto? CPI is consumer prices and inflation. It's the biggest inflationary reading we get month to month. The only other arguable one would maybe be personal consumption, but it's the biggest, most reacted to inflation report and metric we get month to month. And so it's going to move all markets for the most part, excluding maybe small caps. Small caps don't really move with markets, really. But it's going to move the big markets. It's going to move futures, stocks, crypto, Forex, whatever. It's going to move a lot. The macro securities. So like Bitcoin, ETH, other small cryptos might not be affected by it. ARM's still pushing up. It's at 141. Look at Nvidia. Nvidia is completely flat. And a lot of the time ahead of these big economic reports, we get choppy, sideways, neutral activity. And so the reason we get choppiness ahead of these reports is because the market doesn't necessarily know what they want. They don't want to make a big bet or a big, position and then have CPI fundamentally change their price action and technical like predictors. So a lot of the times people just stay flat ahead of these reports. That's why you saw me, I scaled out of some stuff ahead of this report just in case we come in negatively, meaning higher CPI. I don't want to be holding. We're up a lot on the year already in just a month and a half. And so I'd rather just sit on this. I'd rather just cut some of it. And then maybe if we get a big dip, I could add back to it. Depends on if we think it's going to spark like big bear action. We're going to watch gold as well. So here's Nvidia. I'm going to put gold up also. So here's gold on the left. There's gold. Gold up to 2040s. Here's the Q, which is the NASDAQ. And here's the SPY on the right side, which is the S&P E-mini or whatever. Yeah, we could hit 125,000 subs today, guys, I think. Let me see how many subs. Oh yeah, we should be able to hit that. Let me throw this in sub only mode. So again, I'm in sub only mode now. If you haven't already, hit the subscribe button, hit the notification bell. I appreciate the love. Thanks so much. We just put it in sub only mode. Right, that's kind of what I'm planning on, Zig. Yeah, so we are in sub-only mode. Everybody announce yourself. Show us you're subscribed. We appreciate the love. Thanks so much, team. YouTube chat is hilarious. No one has their own views. I don't know. I think smart people ahead of this report understand that nobody knows what's going to happen here. We can throw a prediction out there and be right like I have been over the last 4 readings, but it's pure luck. Like the only thing I've used is slight balance predicting, but even still, I just got really lucky. And so I think traders have to understand that nobody knows what this is going to show up as, and more so, nobody really knows how the market is going to react to it. Like the market can react in a lot of crazy ways from these type of reports, and so it's important to understand there's so much risk that comes from taking big positions now. I think it's better to just be reactive towards what the data actually shows up as versus trying to predict the outcome of today's report. Like a lot of people are just gambling, and if they weren't doing this, they'd be putting it all on red and roulette ahead of these reports. The edge is virtually zero. Taking a huge position now based off of a potential reaction, with maybe the only arguable edge is a straddle position in options, where you're looking for big volatility. You're essentially betting on big volatility. That is something we're probably going to get depending on what the data shows up as. But again, it's just important for traders to understand, like, don't gamble huge positions on essentially a gamble outcome here where nobody knows. So just be smart. Like, again, you don't need to gamble just because it makes your heart. Again, if you have butterflies in your stomach, a lot of people are just justifying gambling. I talked about it yesterday, but, you know, if you tell people, you know, you made $5,000 in roulette, they might look at you like you're a degenerate gambler. If you tell people you made $5,000 in the stock market, they might look at you like you're some genius savant child or, you know, prodigy. So there's just a different reason. I think that's why you get a lot of gamblers in the stock market is because it looks better. But it doesn't mean it's different. All right, guys. Hey, we got 7 minutes here. 7 minutes. Again, hit the subscribe button. Give me your last minute predictions in chat right now. Yeah, big money knows the info potentially, but they don't know how the market's going to react 100%. Again, we see it a lot with earnings where people are mad because the market didn't do what they wanted it to do. Again, what you have to understand for this type of stuff is the market doesn't have to do anything. A lot of people take big bets on earnings, and then when the company posts better than expected EPS, revenue, guidance, and then drops 10%, they think the market's rigged. It's not rigged. You have to understand that the potential outcomes for this are getting baked into this over the last few weeks already. So the potential outcomes are already there, already established, and nobody knows how the market's going to react. This is one of those ones that's a little bit more transparent, I would say, where like typically we get really low CPI, the market's probably going to move up. We get really high CPI, the market's probably going to move down, but it doesn't always follow through. So like when CPI report comes out, we might get a big bounce up if it comes in low, but it doesn't mean it's going to hold that bounce. It doesn't mean it's going to hold. It doesn't mean it's going to stay steady. Anything could essentially happen there. And so you really have to understand it can vary a lot, and you just got to be smart and be careful, I guess is the easiest way to put it, because anything can happen with these reports. You just got to trade really smart and be safe and understand that nobody knows, and just react to the data if you want. But all right, guys, we got 6 minutes here, 6 minutes. Again, stick around though. We got thousands of people here live already. Expectations are 0.2% on the year. Expectations are 2.9%. 2.9%. Again, hit that subscribe button. The reason we get thousands of people here live like we have now is because we cover this data very quickly. And so if you haven't already subscribed, hit the notification bell. I appreciate it. Let's get ready for this. Six minutes, a little bit, 5.5 minutes really. Thousands of people on only 300 likes. I know we can do better than that. It's crazy how many people here are asking for advice on what to do with their money. Yeah, I mean, guys, my advice is to learn how to analyze this stuff yourself and just trade small in the beginning. 5 minutes here, team. 5 minutes. ARM's still ripping up ahead of it. Again, get your last minute predictions out. We still got 5 minutes. Yeah, 5.5% is never going to happen. Look at the SPY rip, the Q ripping back up. Again, 0.2% was what's expected. 2.9% here. No, listen, guys, we got CPI report. I mean, here, y'all got to hurry up, but y'all can't hang out in here. Love you. Love you, buddy. Love you. Have a good day, bud. Jack, no. All right, Jack, here. You got to get out of here, dude. I love you, buddy. I'm sorry. Love you, buddy. Sorry, my son's trying to hide around the cords. I can't do it today. All right, guys. SPY at 500. Almost 500. Let's see if it hits it. $500 is that big psychological level. All right, guys. Hey, we got 4 minutes. 4 minutes. Yeah. Always at 8:30, bro. They always come here right at 8:30, right when a big economic report's coming out. I feel bad being like, yo, y'all got to leave, but always at 8:30. All right, guys, we got 3.5 minutes. Again, make sure you hit the live button next to the play button. Make sure you're fully caught up on stream. Hit the live button next to the play button. Make sure you're fully caught up. Homie wakes up at 4 a.m. every day. Hey, hit the live button. Hit the play button. I appreciate the love. Thanks so much here, guys. We got 3 minutes. My dad does the same thing whenever news is about to drop. Yeah, they don't know what CPI is. All right, team. Hey, 2.5 minutes, guys. ARM has pushed up well over the VWAP and 200 EMA. SPY still right under 500 at 499.50s. Q still at 432.60s, right in between that 200 EMA. Kind of flat. We'll see if we get anything. Again, get your last minute predictions out. We only got a couple minutes left. 2 minutes left, team. Let me know what you guys think is going to happen here. Looking at our poll numbers here. We got polls on Twitter. We got polls on YouTube. 58% think higher on X. On really interesting, on YouTube, we got over 3,000 votes. 47% think higher. 39% think low. 14% say I don't know. All right, guys. Hey, we got 2 minutes. We got 3,000 people here watching live. Again, subscribe, guys. Listen, help me hit 125K. Do it now. We need 400 subs. We got 3,000 people here, essentially. I'm not going to pressure you, but do it now or I'll hate you forever. Subscribe. We got gold trying to make moves. Gold just broke highs again. It retraced back down, though. All right, guys, give me your last minute predictions out in chat right now. We got 1 minute and 20 seconds here, team. 1 minute and 20 seconds. I see 3.2%. Hey, thanks so much for the donation, franchise. Shout out to you for the donation, brother. Thanks so much. Give me your last minute predictions out. Do it. All right, guys. Hey, we got a minute. Hit the live button, guys. Again, you want to make sure your live button looks like this. You really do. All right, so you want to make sure your live button looks like this. Make sure you're fully caught up on stream. You want your live button to be red. If it's not, you're going to be delayed. Put it in fast forward mode. All right. All right, team. 45 seconds. All right, guys, 30 seconds. Where's Bruce Buffer at? It's time. What the heck? All right, guys, it's time. CPI expected at 0.2%. Year over year expected at 2.9%. We got 7 seconds. 7 seconds. We got the Q, the SPY, and gold up. Let's see what the data shows up as. And there's the drop. CPI came in at 0.3%. 0.3%. 3.1% on the year and 0.3% on the month. Broke my streak finally. 0.3% on the month. 3.1% on the year. So much higher than expected. Looks like me exiting these positions ahead of time was correct. Again, 0.3% on the month, 3.1% on the year. Again, 0.3% on the month, 3.1% on the year. Again, we cover this very quickly. You want to know why we got 3,000 plus people here? Is because we cover this fast. Hit the subscribe button if you want it live. Every report we cover, 3.1% on the year, 0.3% on the month. I'm not going to tell you guys how I get it so quickly, but we get it fast. So subscribe if you haven't yet, guys. 0.3% month to month. 3.1% on the year, higher than expected. Core CPI, that's the data release right there. That's the data release. Again, core CPI showed up at 0.4% on the month and 3.9% on the year. So inflation higher than expected universally with all the metrics that dropped today. SPY is all the way back down to 429s. Gold is down to 2033s. Q is all the way down to 430s, 429s. SPY is down to 497s. Gold is down to 2030s. Hit that subscribe button if you haven't already, team. We appreciate the love. Thanks so much. Looks like liquidating was probably the right move ahead of this report. Hey, congrats, Sam. All right, guys. Hey, subscribe here. Hit the notification bell. Again, 0.3% versus 0.2% expected. On the year, we came in at 3.1 versus 2.9%. The markets are starting to dump down. We might get ready to day trade some of this in futures. And the benefit of this, and we lost one of our combine, or we hit the max loss in one of our combines yesterday. Unfortunately, after grinding up some profit, we hit a max loss in it. And we also got a new account to start the day, but we're also in funded accounts as well. But anyways, guys, we can day trade this in futures. I can day trade essentially the Q price action in what's called the E-mini. I can day trade essentially the S&P or the SPY price action in what's called the S&P E-mini in futures. Is actually what the SPY tracks. Again, here's the futures contract of the NASDAQ here. And again, I can day trade short, all this good stuff, no PDT rule in the futures market. And we're going to get ready to day trade some of this right now. This is one of our combine accounts. But again, look at the market's dump. And again, look, here's the NASDAQ futures contract, and then here's the Q. Top Step is a sponsor of mine. What they do is they give you a demo and they test your skill. And if you can pass the test, they fund you. If you don't pass the test, you're only out what you paid for it. And again, this is incredibly useful because most day traders lose. If you're trying to day trade, do not put up thousands of dollars yourself trying to day trade stocks. You'll probably lose it, and this is a much better way to test your skill. Learn how to trade, and if you're good enough to pass it, you can get started for $49 for the base combine. If you pass that test, they give you a demo and they test your skill, and just taking the challenge builds your skill. But if you can pass it, the base one, you got to hit 3K in profit without losing 2K, a reasonable 2 to 3 ratio. If you can pass that test, they fund you 50K with a 90% split, up to 150K with a 90% split. Free funding coaches, tons of great resources, and if you lose, it's not the end of the world, but if you pass it, you get 90%. And so it's the best of both worlds in that way. Limited risk, you still keep most of your reward if you can get funded. Great way to test your skill. And again, in the futures market, you can day trade the S&P, the NASDAQ, currencies, gold and silver. Patterns are very similar to day trading stocks and blue chips. There's just no PDT rule in futures. They are a sponsor of mine. I'm certainly biased in their favor because they pay me money, but if you want to check it out, here's the link. Great way to help support the channel. Check out Top Step. We're going to get ready to day trade some of this stuff. We got a little bounce here after CPI. Now, this is a combine account, and so we're shorting this. And if we lose this account, it's all good. Like I said, it's a combine account, but we're betting on the downside. There we go. Starting to drop. Green. Let's flush. All right, so we just made about $70, I think, right now. I think we just made about 70 bucks. Yeah, we made exactly $70. Okay, that's good. We'll see if we can do this again. Again, we're essentially day trading the Q, very similar to day trading stocks. Isn't it bullish that we got a lower than last year? No, it's all relative to expectations most of the time. Like the reaction in this type of stuff is all relative to expectations. And so if we're expecting 0.2% and we show up higher than that, if we're expecting 2.9% and we show up higher than that, then that's typically the way the market is going to respond. All right, so we tried to piggyback off of that big move, made a little bit in futures. And again, stick around. We will day trade fully into the opening bell as well. We still got over 3,000 people here. My bad. I'm realizing y'all can't really see this. You can see it's the same price action, though. Here's the Q on the right. And then if we put up our Top Step funded program. Again, remember, guys, we put this banner up multiple times every day. Remember, I am terrible at this stuff. I have no idea what I'm talking about. Remember, CFTC Rule 4.41, hypothetical or simulated performance results have certain limitations and may vary. All that good stuff. Understand that. Don't sue me, basically, is what I'm saying. You think there's any shot we V-shaped today? I don't know. These are universally worse inflation numbers. And so these are universally worse inflation numbers. So I really don't know. I hope we do, but I don't know. All right, so again, here's the NASDAQ. Here's the Q, and there's gold looking weak as well. Part of me wants to short this, but we're also right around lows of the day that I think it's kind of risky. I guess we'll take it. We got a little cushion that we can play with on the day now, too. I know lows aren't really the most safe numbers. All right, so we just got a little bit more. We're up about 110 on the day in this combine account. We're up 105. I mean, it's definitely not a crash. I mean, the market's up so much. Again, the market's not going to go straight up. And this inflation data wasn't like the worst data it could ever be. It wasn't good at all, but it wasn't like crash, parabolic drop or anything like that. Again, like the easiest way to show you that is here's a weekly chart. this is today so far. You know? So definitely not a crash, brother. I get the bears are really kind of doom and gloom. It's the end of the world. And maybe this is the spark for that to happen. But we're just not there yet. Let me know what you guys think. What do you do? Where do you think the market's going to close today? Where do you think the Q is going to close today? Q currently at 435s. So here's the Q. We have more inflation data Friday. We have PPI inflation, so the other side of the inflation token. I don't know why they separated it like they did. Usually it's consecutive days, CPI and then PPI. For whatever reason, they separated it. I'm not sure why. All right, so again, we might short this. We got a little cushion, so we can take 2 contracts now, although this is a risky trade, guys. All right, so we just got out of a little bit more day trading, scalping this price action. Like I always tell people, react. React to the movement here. We're currently up on top step, $160. Reacting to it is the best move, in my opinion. But again, not an investment professional, not even claiming to be a good trader, of course. You know, always make your own assessment, trade responsibly. I have no idea what I'm talking about. Are you streaming Airbnb? Not earnings, no. Where's Bitcoin at? Is Bitcoin retracing some? Yeah, so Bitcoin's down too. All right, so we keep dipping. I don't know what I want to do with this though. This looks like a weak pattern to me, but I also understand that if we get a bounce, we could bounce a lot. And so we have a cushion on the day. And again, guys, we are day trading futures on Top Step. Looks very similar to day trading stocks, doesn't it? But there's no PDT rule. And so again, you can check it out there. All right, so we got a nice little pop back up. I'm going to short this. We got a cushion. All right, so we just made another 50 bucks or so. Yeah, so we are now up over 200. Trying to isolate the best momentum. Now we have a decent cushion on the day. And so what I do with these funded account programs is very simple. I build up a cushion. Once I build up that cushion, and I think this is like the risk management system that a lot of people should have. And again, I'm not the best at risk management, but I think this is a realistic system if you can follow it. Okay, I think building up a small profit first with small size. I haven't taken more than 1 contract per position all day trading futures, right? And so when you're first starting to trade on the day, build up a small cushion, a couple $100. Once you have that cushion, then you're allowed to take larger risks. Now I can take more than 1 contract if I want. If I lose after scaling up, I'm right back to break even, maybe a small win, maybe a small loss, and I don't have a huge drawdown in my account. As opposed to taking huge size right off the get-go, trying to get rich or whatever, and then just having these massive drawdowns in my account when I'm wrong. It makes a lot more sense, especially if you're trying to pass these funded programs. Build up a small cushion, take larger risks once you have that cushion. If you win again, you can take even larger risks, and that way you're protected from big drawdowns. I think that's the right way to do it, in my opinion. And with that said, we've got that cushion on the day. We got 210. I don't know if I'm going to take larger size, but I think that's the right move. Where did you get your data? CPI came in at 0.3 versus 0.2. Core CPI, it's not. Core CPI showed up at higher than expected as well. On the year, though, it came in at 3.1 versus 2.9%. Depends on if you're looking at core or regular, Maurice. You know, it looks like you don't know the difference between core, Maurice, and regular CPI is what it seems, brother. So core CPI, just to let you know, is excluding energy and food prices, right? So that expectation is higher than base CPI, but they're different things. Yeah, all good. All right, guys. So again, ARM all the way up at 137.50s. Yeah, is this an overreaction? I'm not sure. I see the SPY right at that previous closing price. Or no. This is the previous lifetime high. I don't know when I drew this level. But this looks like a bear flag to me in futures. I just don't know if I trust it enough now because it can do anything. We do have a nice cushion on the day, though. I might switch to the micro NASDAQ. Scale down my size a little bit because I don't trust this position very much at all. And we can take one contract and take a little bit more room with these positions now and add to these positions. And we can make small amounts. There we go. Just took half off. If you want to take smaller trades, micros are great. All right, so we just made like 40 bucks just now. 30 bucks maybe. Shorting. We are now up 234 on the day. No losses yet day trading here. Again, I think a lot of people and this is a mistake that I make in my day trading. And again, I'm not claiming to be some pro day trader or anything like that, but a mistake that I consistently make is that I target low liquidity times. And I don't have the discipline sometimes to just stop and not push it. I think one thing that'll massively benefit your results in trading is sitting back waiting for big events and volatility. If you can wait for high liquidity, the patterns are going to work better, usually, depending on what it is. And so you just have to adjust your size to compensate for it, because in high liquidity, you're going to have a bigger range and you're going to lose and make more in those periods of time. And so if you don't like that type of risk, you got to scale down your size and compensate for the added volatility. We're going to short into a little pop-up here. We're going to add a little bit more to this if we can. 2 contracts. We'll take up to 3 or 4. 3 contracts. And it looks like we might be wrong here. Okay, I'm not going to add more. We're up too much short term for me. We'll give it a second. We break the top of this candle wick. We're cutting it. Yeah, we got to get out. So we just lost $50. Our first loss of the day, unfortunately. We're still up 170 bucks, but our win-loss ratio is 6-1. I think that's good. Data is out. Yeah, a lot of people, I've seen a lot of people in chat not recognize that the data is out. Hit the live button, guys. A lot of you guys are delayed on the stream, and y'all, some people are acting like I'm late. But again, you got to hit the live button. Is an indication for sure. Yeah, I think if you look at the CME Watch Tool page and you look at the difference in the change in the rate decision expectations, I think a continued pause is going to be much more. Yeah, so look, so now at this point in March, the next rate decision, 95% of people essentially are betting on another pause instead of a rate cut like we have here at 5.5%. And so again, 95% of people. Now, prior to this, I think it was like 15% down here at a rate cut expectation, and up here it was 85%. But now 95% of people expecting a pause still, which it makes sense, right? The reason this is happening and the reason that change in percentages is happening is because higher inflation means more risk long term for inflation, right? There's a balancing act with the Fed of recession risks and inflation risks, right? The greater the inflation risks, the less likely the Fed is to cut rates. The more likely the Fed is to remain hawkish. Hawkish meaning a more restrictive monetary policy with rate hikes. And so the worse inflation is, the more likely that is to occur, right? And so when we have worse inflation data signaling higher inflation, a hawkish stance is more appropriate for the Fed, and that's why we have 94.5% of people expecting another pause, which is a more hawkish thing, of course, than a cut. A cut in rates would be a very dovish thing. And the greater the recession risks, the more likely the Fed is to stay dovish, want a more expanding monetary policy. And so it's all balancing with the Fed, right? That's what makes the most sense. It's a balancing act with the Fed. Yeah, I was right about that last direction. We just got a little bit more of a bounce, unfortunately, there, and it's all good. It's all good. Yeah, I mean, 3.1 is not that bad, especially, it's all relative. Like, it depends on where you look at it. If you look at it in peak inflation times a year and a half to 2 years ago when inflation was almost 9%, 3.1% ain't looking too rough. If you look at it relative to expectations, where we expected 0.2% and 2.9% on the year, then it's higher than expected, of course. But either way, I think a pause makes sense in March. I think we're almost certainly going to get a pause. And so if you're trying to bet on what we do in March, I think a pause is almost certain. I think it's very unlikely, unless we get PCE data come in just way better than expected, which is, I mean, it could happen. PCE is the Fed's preferred inflation metric. It's the personal consumption expenditure. It's what Powell and other members of the Fed have consistently said they prefer to look at over CPI and PCE, or over CPI and PPI is, again, what's called the personal consumption expenditure. Core PCE is the big one that you look at. I have to look at when that actually comes out. I'm not sure when PCE drops next. I don't think it's next week. I think it might be the week after. Or maybe we've already got it for this month. Okay, so no, I'm sorry. Yeah, so it's going to be dropping. Okay, so PCE data is coming out, I believe, March 1st. Let me see. CB consumer confidence, GDP data. PMI. Yeah, so or no, when is PCE data? Chat, help me out. Oh, wait. There it is. So PCE data actually drops February 28th. So not this week, but the week after that. So yeah, unless, and the next FOMC meeting is mid-March. So again, it'll be interesting to see what happens. Another thing, guys, if you want to know another one of my sponsors, great company, genuinely useful in stocks and futures trading, to be honest. A great sponsor of mine is a company called Chart Prime. It's a trading view indicator service, so you can use it with anything on TradingView. You can use it on stocks, crypto, forex, futures. Genuinely impressive, in my opinion. Genuinely impressive. If you backtest this yourself, right? And let's talk about it and backtest it, right? But if you backtest Chart Prime, just looking at the recent action on the S&P 500, like, look at this. So the strong signal certainly worked here. We got this strong signal way back here. Beautiful drop. This buy signal, let's back test it. You could say this one was wrong, but look at the strong signal here. It called that strong signal. Beautiful breakdown all morning from that. This is a 5-minute chart. So this is hours and hours of breakdown. Buy signal came in here, worked really nicely. If you zoom in, you can see this strong signal worked too. We got some drops afterwards. This buy signal, you might be able to say is wrong. Look at this sell signal, beautiful drops, and then look at this strong signal here, beautiful bounce afterwards. So 1, 2, 3, 4, 5, 6, 7, 8, 2 out of 8. That's 75%. 75%. And I can't fake this. And again, you can keep looking back and seeing how accurate this is. Again, we can keep going if you guys want. But look, strong buy signal here, beautiful bounce, sell signal drop, strong signal bounce, sell signal drop, buy signal bounce, sell signal drop. And so again, after that, that's 8, 9, 10, 11, 12, 13, 14, 15. 2 out of 15, if you look back at the last few days, worked, in my opinion. And I can't guarantee you're going to make money from this. Nobody can. It's like $40 a month. And you can use this on any time frame. I can put an hourly chart up and look at it on an hourly perspective. I can put up a back tester, a screener, an oscillator, and they're not always going to work at one time. Like, look at the sell signal show up, and then hours later, and look at that strong buy signal show up again. Nice bounce for days. And so again, test it out yourself if you haven't already. It's a company called Chart Prime. They are a sponsor of mine. So I'm certainly biased in their favor, and I can't guarantee you're going to make money. Nobody can. But again, test them out. I challenge you to back test it yourself and check it out. You can find some really big edge, in my opinion, from it. So check out the link right there. All right, guys. So we are getting a bounce back up in the NASDAQ 100 here. I'm going to start shorting this if I can catch it. All right, so we got one contract here. I need a little bit more, so I'm okay with that big bounce. We're trading micro contracts, which are a little bit smaller size versus the regular NASDAQ. And we'll take up to 4. All right, so we're in 4 contracts. We're kind of choppy back and forth flat. We got a big cushion on the day, so no matter what here, we're going to be all right. Right, so we've been kind of flat, choppy on this position. And again, you can see how similar this is to day trading stocks, regardless of whether I win or lose. Let's see if it keeps dumping. See, the question is, do I want to add to it? We're down 50 bucks, 30 bucks. I guess we'll add one more position to it just because we're already so green on the day. All right, we just took half, took another piece, and we'll hold the last little position. So that's nice. We made some of our money back. Cut the rest of that there. So yeah, we're up about 200 on the day, right around, give or take. Yeah, almost exactly 200, 199. Our win to loss ratio is genuinely impressive today, though. So like, look, our win to loss ratio is 10 to 1. And again, I do use Chart Prime a ton for my trading. No, CPI came in higher than expected, unfortunately, and made the market dump. Here, let me end this poll. And we got almost 5,000 votes on this poll. And so what's a good poll now? We're going to do when will the Fed cut rates? All right, so we're going to start to get into another short position here, day trading. Small position, though. All right, so we're going to do another poll. When will the Fed cut rates? We're going to do March, June, or no, we're going to do March, May. All right, so we're going to take half off there, lock that in, and we'll probably hold the rest. So let me see the actual expectation. So again, when is the Fed going to cut rates? March, May, June, or July plus? Really good question, I think. We could break down. We're going to add another 2 contracts here. There we go. All right, took half off there. Cut the rest out. All right, so we're up over 200 now, about 220 or so. My Quant Tower performance graph showed some big drawdowns. I mean, okay. My drawdown on the day is $65 for my max drawdown. $65. My win-loss ratio is 6 to 1, and I'm up 220 on the day with a $65 drawdown, bro. Is it possible to predict CPI news data and get ahead of big jumps? No, not really. I joked around. And prior to this last meeting, I got 4 in a row correct for CPI. Hey, shout out to Envy. Thanks so much for the donation. Isn't rate cuts bad for the market? Sometimes they are. I would say most of the time the market has reacted negatively to rate cuts, but it's not always like a... It's not always... Sometimes the market negativity is just the initial reaction, and then it kind of reclaims and gets back some. It just depends, right? It depends on the macroeconomic situation, to be honest. But a lot of the time, yes, the market does react negatively to rate cuts, even though rate cuts would arguably be a more dovish thing, of course. Like, rate cuts signal less restrictive monetary policy, which is a positive thing for the economy. It means the Fed is more optimistic, is the easiest way to put it. It's the high buy reacts negatively. People take profit. Yeah, exactly. Gold, yeah, gold all the way down to 2018s. We do have what I would say could be a bear flag in charting, but I think we're down so much, and I think the bounces that we've gotten so far are very slight, and so I don't trust it enough to continue shorting this. I just don't trust this enough to keep shorting the NASDAQ 100 here. And again, guys, like I said, if you want to trade Top Step, check out Top Step with me. Top Step funds traders and futures. It really is a great way to learn how to day trade with limited risk. Most day traders lose money, and so if you try to put the money up yourself, you're probably going to lose it. Why not take a challenge? And if you're good enough to pass the challenge, get funded, not have to risk all that money. But if you're not good enough to pass the challenge, it's going to be most people. You're only out $50 for the base one, $150 for the top one. It's just a great way to limit risk. You still have some pressure. Trading is about learning how to trade under pressure. Right? And that's a very difficult thing to understand and learn. It's one of the reasons I tell everybody that I'm not an expert. I'm not a guru. I'm not even claiming to be a good trader, because I think the more I tell people that, the more pressure I have to follow through with that type of ideology or that type of facade. And so I would rather just say, yo, I'm not an expert. I'm not even claiming to be a good trader. And if I lose 3 days in a row, I don't have any added pressure from that. You know what I mean? I think that's why, like people say all the time, they joke about this. People say this all the time. Why do I have this disclaimer up? I have this disclaimer up so that people can't ever try to act like I'm some day trading guru, right? Like I'd rather have this disclaimer up and tell people I'm not a day trading guru than act like I'm a day trading guru and feel the need to be dishonest. The real question of the day, guys, that probably the biggest question that we have today in markets right now, in my opinion, the biggest question that we have today is who wins, Alexander Volkanovski or Ilia Topuria. I don't know, man. I'm worried for Volk. I think Volk might have some trouble. I think Ilia looks very, very good. Very, very good as a fighter. And so Volk is one of the GOATs, but I'm nervous for him. Yeah, I mean, I understand why you might say that, but what makes you say, okay, layoffs are normal, you know? Would you describe yourself as an MMA guru? I'm not a guru in anything. I know a lot about MMA, though, but I'm not a guru. I know a lot about watching MMA. I don't know a lot about MMA as a whole. I train jiu-jitsu, but like I'm a spazzy white belt. That's top 3 worst jiu-jitsu practitioners in the world. So yeah, I'm not, but I know a lot about MMA. I watch MMA a lot, you know. All right, guys, Bitcoin hit 50K. Will it hold? Will it hold? Definitely top 3, Bruce. You know. Who's your favorite fighter? Right now, I'm going to go with O'Malley. I think O'Malley's just super fun to watch. People hate on him, and he does a really good job of having that kind of that Conor McGregor effect, in which some people tune in because they want to watch him and support him. Some people tune in because they want to see him get KO'd, but they tune in regardless. And I think objectively he's fun to watch. People can't say he's not fun to watch. I don't know. People hate on him, I think, but, you know. Sean Strickland. I don't really like the way Strickland fights, but I think he's a funny personality, you know. Nvidia moving down further, so let's take a look. Gold's still dipping, guys. So gold's still dipping down fast. Again, Nvidia is still at 706s here, 706s. So again, we'll see if it holds. I don't know. We still got 1,500 people here live. And again, we're going to keep trading, guys. So stick around. We're going to keep day trading the open like we always do. Would you consider yourself a watching guru? Definitely top 3 in the world tip, for sure. Definitely top 3. I don't like Izzy. Izzy is not the biggest KO artist. He talks a lot, and honestly, he fights very similar to Strickland. You know, counter striker, doesn't have a lot of KOs, kind of sits back and tries to point fight and win in that regard. And I don't know. Another guy I like a lot is Yair Rodriguez. Yair is a beast, bro. He's got spinning elbows and all that stuff. He's fun to watch too. Yeah. Bro, I'm kind of bummed out. Zapon sent me the Love Guru meme. I'm kind of disappointed that Mike Myers is such a jerk in real life. You know, like, he's such a funny guy, but for whatever reason, he's just a huge jerk in real life. I don't know why, but my guy's just mean, bro. He's just mean. Mike Myers, just mean dude. Why would fold fall if inflation is up? I think my friends buy gold and silver, these reports. Because inflation is very, very rarely going to go down, right? Usman's boring too, in all honesty. I was very happy. I like Leon Edwards a lot. Leon Edwards. When he knocked out Usman, I jumped up and yelled like a little girl. All right, guys, Q starting to break lows again. Look at the Q, look at the SPY, look at gold, look at Nvidia. All 3 of them are breaking down right now. It looks like me cutting some of these positions ahead of the open was the smart move, because we got out ahead of the CPI report, and it looks like it was the right move. Tesla down to 182s. So we cut some Tesla yesterday too. It looks like that was the right move. Yeah, Habib's one of the GOATs for sure, but Habib's actually fun to watch, and he usually knocks people out or subs them. So I just don't like point fighters. I'm not a hater for not liking Usman. He's just a point fighter. He had that great knockout of Masvidal, and I was super happy to see that. But again, I just don't like point fighters. I think that's pretty normal, you know. I'm allowed to have preferences with fighters without necessarily being a hater. All right. Again, will the SPY hold? SPY at 494s. Q all the way down at 427.60s. Yeah, again, like I told you guys earlier, I told you guys this ahead of the report. I think that we're time. I think a correction is time. I think that we've been moving up a lot over the last, year. That it's time to pull back a little bit. That's normal. I think markets are not going to go straight up, and I think they're up a lot over the last couple months. And so I think a pullback is very reasonable at this point in time. Yeah, but again, P saying about inflation, you got to understand, I don't know. I don't really watch boxing that much, Hype. I know I want to see Jake Paul get KO'd. That's all I know. I just want to see him get KO'd one time. Just one time, you know. But going back to the market here, I think the market's up a lot, and I think it's time to get a correction here. We liquidated a lot of our positions ahead of this because I think this could be the catalyst to spark downward pressure, and that's kind of what we're seeing in a lot of different markets right now. Gold, crypto, equities, futures. I think it's just time to pull back. What's the lowest amount you can day trade E-mini micros in your own account, and with no PDT you could buy, sell? It depends, Michael. It depends on the platform. One contract of the micro E-mini is $5,000 basically. And so, I mean, it's going to cost money, you know, but some might give you leverage. Again, I would recommend a funded account program. Top Steps is $50. You could try it out for $50. If you pass it, there's no PDT rule. You can get a 90% split, all that good stuff. If you fail it, you probably would have lost more. And again, it doesn't matter. Even if you don't use Top Step, I think it's incredibly risky as a new futures trader to put up the money yourself. I think it's incredibly risky as a new futures trader to put up the money yourself and risk that in the beginning. Every trader thinks they're going to be an outlier and they're going to somehow get rich and ride off into the sunset. Most of the time, new traders lose their first few accounts. That's just the reality of it, right? So in my opinion, it doesn't make a lot of sense putting the money up yourself and risking thousands in the beginning. But again, I'm biased because Top Step's a sponsor of mine. And if you want to check out sponsor Top Step, link is in the description. But I would just be very careful. Most day traders lose, and so limit your risk. Try a funded account program like Top Step. You know. Just a pullback, maybe. I don't think we have any more data today, though. Let me see. Let me make sure. PCE data drops. PCE data drops. Not next week, but the week after that. We got some big earnings, I think, next week as well, maybe. When's the FOMC minutes report? We got Bowman speaking yesterday, Tuesday. So, yeah, that's all the big reports for today. The day trading open might be volatile, though, so stick around. Tomorrow we just got a lot of Fed members speaking. We got Bank of England, Fed Goolsby speaking at 9:30 at the opening bell. Pretty slow outside of that. Thursday we got retail sales, housing starts, jobless claims, the Philly Fed index. Yeah, so Thursday we got a lot of stuff. And then Friday we have PPI. So there's two sides of the inflationary coin. PPI and CPI. CPI is what we had today. It's the bigger one. PPI drops on Friday. As for earnings here today, team. So this evening we do have Airbnb, Upstart, Robinhood, Lyft, MGM, Zillow, a bunch of other earnings this evening. Tomorrow morning we've got Barrett Gold, Sony, CME Group, Kraft Heinz, a couple other ones, but it's slow. I don't really trade natty gas that much, Jacob. I'm just not much of a natty gas trader. It's just not really something I shoot for and try to do. Natural gas is like, it's, yeah, natty gas is kind of a market that I trade oil more. Yeah, I'm kind of flat on Boeing. I'm in a little piece of it, but what happened with Boeing is that it moved up, we took profit, and now we're in like a really small position. My Alibaba trade's not doing that hot though. But again, like my portfolio is green. It doesn't matter too much. Like I'm very green on the year, and again, I did liquidate a lot of my stuff this morning, if you guys remember. I did it for a reason. Like the market's extended on the upside, and so I kind of had a feeling we were gonna get a negative reaction today. Even if the numbers came in neutral, I thought we might get a negative reaction. And so again, if you guys remember me this morning, I liquidated a bunch of stuff, and I liquidated some stuff yesterday for that. Looks like that was the right decision though. We're still green on the year and everything, so love to see it. Maybe we'll buy up some stuff now though, but it's harder to argue a buy right now because the market's up so much still, even with this pullback on the Q. Here's a weekly chart. The pullback that we are currently experiencing is this. You know, so like it's still a hard argument for a dip buy. Still, it depends on the stock though, I guess. If CPI is up, PPI will be down. Not necessarily. It depends. Can anyone explain the S&P drop pre-market today? The S&P is not open. If you're talking about SPY or S&P futures, the E-mini and futures, it's down because of CPI coming in higher than expected, signaling more inflation problems in the market. That's why a lot of stuff's down. Yeah, I don't know if it's going to collapse at the open or what, but healthy. Yeah, we'll see. Nvidia, where's Nvidia? In 704, so $700 for Nvidia. I think it's a big milestone level that we probably want to pay attention to. Nvidia is up so much; it's got a huge market cap now, but I still think psychological levels can play a factor. When did CPI come out? 8:30 Eastern Standard Time is when it dropped. We still got 16 minutes until the market opens. So, again, we're going to day trade this at the opening bell. We'll see if it holds or what. But appreciate the donations. Shout out to Franchise Envy. Where are we at sub-wise here, team? Okay, we need less than 200 subs now to break 125,000. Listen, guys, we still got 15, 14, 1,300 people here live. Let me sell you on my channel real quick, okay? Everything we put out there is free. We don't claim to be an expert. We don't act like gurus. Prior to this last CPI report, we had guessed the last 4 CPI readings right, I think, and jobless claims last week. We were slightly off with this one. We covered the data faster than anybody else, in my personal subjective opinion. I can't guarantee that, but we covered the data very quickly. The reason we've grown this channel is because we get thousands of people here live because we cover it fast. And so if you want a very reliable place that covers most of the big economic data that you want to hear, Jerome Powell, FOMC decisions, rate hikes, Fed minutes reports, jobless claims reports, weekly GDP, PCE, CPI, PPI, all that good stuff. Big earnings, we stream all the big earnings calls and all the big earnings reactions live. And again, we do this without selling a course, without selling our own service, without claiming to be experts. And so if you want a good, reliable place, hit the subscribe button. Do it now. Try it one time. Might feel good. Peer pressure them into subscribing. Giveaway at 125. Ugh. Don't disrespect Izzy, bro. Listen, Izzy is highly skilled. He really is. Honestly, you know he's skilled because he KO'd Pereira. All right. And so I like Izzy. I don't know, bro. The dog controversy. Have you looked into the dog controversy that Strickland brought up? I think Izzy, he plays the heel, and so you can't really get mad if people treat him like that, you know? But he's obviously highly skilled, you know? Don't be so emotional. Hit the sub button. What are you waiting for? Hey, thank you, Hype. Thug Rose? Rose is all right. Rose is emotional, too. Yeah, Volk. Volk is good. I don't know. You got to question where Volk's head's at, though. I'm really rooting for Leon Edwards, bro. I want Leon Edwards. Who's he fighting next? They're speculating that Leon is going to fight Hamzat Chimaev. Whew. I hope he wins. I really am rooting for Leon. Q's still moving up on a longer term perspective, but it's definitely down on the day from CPI. Here's the micro E-mini. Again, you'll notice very similar price action here and here. You can day trade this right side, no PDT rule. Did they already release CPI data? They might have, Enrique. It's all good, brother. Numbers are right here, brother. This is the numbers right here. CPI 0.3 versus 0.2%. All right. 14 minutes, team. 14 minutes. We'll see if we get anything good. I'm kind of bummed, bro. Like, So at my jiu-jitsu gym, we had this one guy who was like really good. He like did private lessons with my son, just a good dude, young guy. Really good wrestler, had really good wrestling classes. Taught us a lot of cool stuff. Taught me leg locks, like taught me ankle locks, heel hooks, all that cool stuff. Yesterday, he was let go at the gym, bro. I'm kind of bummed, man. I'm kind of bummed. And, like, he was the one that worked with my son the most, you know? I don't know why they let him go. I'm going to keep going to the gym. But I feel for him, man. I feel for him, you know? All right, NVIDIA's starting to bounce. Micro E-mini bouncing. Q bouncing back up. Let's put gold up here on the right side. And we're going to get ready to day trade futures at the opening bell. Look at gold bouncing up with it as well. So, again, gold kind of follows the rest of the market. This is kind of what I thought. Where gold is typically moving with the equities market. So, if the Q's moving down, gold's probably moving down with it, so forth. Hey, thank you, Gabe. No giveaway at 125. About an ounce of silver. Bro, who do you think I am? Max? Bro, I'm not Max. I'm not giving away silver, bro, in New York, dude. I don't live in New York. I'm not a jeweler, brother. They didn't feature me in Uncut Gems, all right? I'm not an actor slash jeweler guy named Max. I'm not giving away free silver, dude. Ounces of silver. What are you talking about? You think I got ounces hanging out right now? No, I'm not doing it. What do you guys think? Does the market bounce back after the opening bell? That's a good question. Does the market bounce back after the open? Let me know. Sorry, some of y'all don't understand the reference I just made regarding the jeweler. Some of you do, though, but some of y'all don't. Hi, I'm new here. Love your content. Thanks, man. Appreciate it. Where do you see the news so fast? I'm not telling, brother. I'm not telling. You know. I have to poop because I just took my Addy, but it appears I'll have to wait 10 minutes. Enrique, bro, why are you telling us this, dude? Too much information, brother. Like, I'm not judging. Live your life, dude. I have ADHD. I'm unmedicated, though. I don't take anything. I like my sleep too much to take ADHD meds. But too much information, brother. Too much information, dude. Can you give us feedback on CPI? So CPI, like, all right. So a couple nuances to the CPI report. All right. The first one, I think everybody here knows I'm ADHD too. Even my coach at jiu-jitsu was like, dude, slow down, man. I try to run through things too quickly. Anyways, let me slow down for a second. So CPI report today. Okay, there's a couple nuances. Number one, the reaction was negative. All right, this is because it was higher than expected universally for both core CPI, so core excluding food and energy. Prices for things that don't include food and energy were up more than expected. Prices for everything were up more than expected. So universally for metrics today in CPI, they were higher than expected. That caused a drop in markets and everything, in gold, in the Q, in NVIDIA, in Bitcoin, and crypto. Macro markets dipped. All right, that's the first thing to understand. The second thing to understand is that inflation as a whole is in a much better spot than it was a year ago. And so even though we've dropped, the amount of which we've dropped is still pretty insignificant when you zoom out. You know, they always say when in doubt, zoom out. Look at a macro chart like this. This drop is still relatively insignificant for all of these different things. Now, this could just be the start of the drop. So it is possible that this sparks a much longer term correction in prices. I would agree that equities, futures, everything are probably extended on the upside today. I would agree with that. I think the markets are pretty high. I think it might be time for a correction. And this is one of the reasons we liquidated a lot of stuff ahead of it. But at the same time, it doesn't necessarily mean anything. NVIDIA is still over 700. The Q still over 430s. or still over 425. Gold still over 2,000. So markets are still arguably up. And heading into the opening bell, number one, the first thing that this CPI report most likely influences directly is going to be whether the Fed chooses to raise rates in March, which is seemingly less and less likely now. The Fed is much more likely to remain more hawkish with pauses instead of cutting rates in March like some people expected. And those percentages certainly skewed in that regard, where 95% of people essentially expect another pause in March instead of a rate cut. The question is, do we cut rates in May now? And if we look at the poll that we did earlier, we asked people, when will the FOMC cut rates? 31% say in March. That is a shocking vote number. Do you guys truly believe the Fed is going to cut rates in March? I don't know. Why? Why do y'all think that? I disagree. Maybe I'm wrong. I'm top 3 most wrong traders in the world right now, but I disagree. I don't think it's going to be in March. The Fed is almost certain to not cut rates in March. In fact, it's less than 10% of people think the Fed is going to cut rates in March. I think it's much more probable that it's in May or June or July. But I think March is the least likely time that they're going to cut rates when you consider, again, understand the worse inflation is, the less likely the Fed is to cut rates. So since we had worse inflation data, it's just not super likely we're going to cut rates in March. May, June, July, those are the more probable times, but maybe not. I don't know. The news is already out, guys. Yeah, I just don't think we're going to get cuts in March. I think it's too soon. I think inflation. If today's CPI report showed up much lower than expected, then you could maybe argue a March cut. But since it came in universally higher than expected, it's just not super likely. Again, though, chat, let me know what you guys think. We got 6 minutes here, 6 minutes until the opening bell. Any dip buys today with the report? Not yet for me personally. I haven't bought anything yet. Whether you guys want to is arguable. Again, I don't know. I think we're down, but I don't think we're down enough for me to really get comfortable buying up a lot of stuff here. I think usually when I bought up, like a lot of my current positions here, remember I'm holding ARM from IPO day. I was holding Amex from like 144s. It's at 210. I'm holding Citigroup from 42s. It's at 53s. I'm holding Disney from 90. It's at 110, basically almost a 110. We're down a little bit in Etsy. I'm holding Ford from 11s. It's at 12s. I'm holding Google from 125s. It's at 145s. A lot of these positions, I'm holding Home Depot from 290s. It's at 360s. Honeywell from 180s. It's at 190s. Coca-Cola from 52s. It's at 60 plus. MGM from 39s. It's at 46. Microsoft from 312s. It's at over 400. Most of these positions that I have very good averages in, that I'm up pretty big percentages position-wise, most of these were bought during phases of the market in which we had extended sustained pullbacks. Like we had a period of time mid to late last year where we had months and months of red action, months and months of pullbacks. That is when I decided to jump into a lot of these positions, and it turned out to be a very good move for me. And so I'm not against buying dips, but they need to be more dippy. And the easiest way I could put it, they need to be more sustained pullbacks and longer term dips as opposed to just a big downward response to CPI. We're even with this big drop taken into consideration, it's not down enough for me to feel comfortable buying. I think it's still arguable that the market's too high. So for me, I'm just going to chill and wait. Maybe day trade. Hey, thank you, Brent. I appreciate it, man. Thanks. Yeah, I'm good, Brent. Sorry, brother. I'm not going to say the D word. I can't tell what's too controversial to say or what's not, even though that shouldn't be, but I'm just going to play it safe, brother. Sorry, I'm not going to say it. Too many people try to trick me into saying nonsense on this stream, so I just avoid saying it. If I can't pronounce somebody's names or I don't know what their name means, I usually just abbreviate it with one letter. I usually just say the first letter of their name, you know. Anyways. Hey, thank you, Dana. So would you buy with 10%, 20%, 50%? I would definitely buy if we drop 50%. 10%, I'd buy some stuff. 20%, I'd buy some stuff. I'd buy a lot of things if it dropped 50%. Yeah, we'll see if the market bounces back. I hope it does. I'm a bull in markets. I tend to want the market to do well. I don't want the market to fail. And I think most people that want the market to fail are just mad they missed out on larger gains overall. Again, the easiest way to put it is like, and again, anybody that's truly been watching my stream, if you want to know why we get some haters, right, is because a year and a half ago, I told people the market didn't have to crash. Like, what happened was when the SPY and the Q were at these really deep levels. So here, right, if you guys, anybody that's been watching my channel long enough should recognize that this is truth. When the market was here, right, everybody told me the market was about to fall. The market was about to disastrously crash, and that it was just going to be doom and gloom. The sky was going to fall. It was going to be the end of the world. The SPY was going to drop 80% down to whatever, and that it was just the end of the world. I was contrarian to those thoughts. I told most of my stream that the market didn't have to crash, and that I'm going to be buying up some stuff. And I did. You know, I did buy up some stuff. And sure enough, time over the last year plus proved me correct. Proved me correct. But I think a lot of people, again, I blame influencers a lot. I think there's a lot of big influencers that just kind of tell everybody the market's always about to crash, and they dilute their videos because they're wrong so much about their crash predictions, right? If you look at a lot of economic YouTubers, a lot of them tell you the market's going to crash every day, right? They tell you the market's going to crash every day. They're putting out a video saying, don't buy this, or this is going to happen, and they're doing the whole thing, which I can't even judge. I do some of that stuff too, but point is, like, doom gets clicks, right? The news is the same way. The news wants you to think that it's just the end of the world, that the sky is going to fall, and that's how they get clicks, right? And if it's hard for some traders and investors to separate themselves from that bias and say, hey, the sky's not about to fall, the world's not always going to end. These YouTubers just want to get clicks, and so a lot of people overpredict crashes. And in hindsight, we were absolutely right, and the market flew up. And I think if you missed out on this whole move, you might be one of those traders that are mad. Not everybody. And again, I side with the bears to a certain extent right now. I think the market's a little bit too extended on the upside, but I don't think it has to happen. You know, I think it could do the other side. It could go to the other way and go to the upside. Anyways, market's about to open right now. This is certainly not a market crash. A market crash is a 15%. Like, a crash is defined as like a 10 to 15% drop minimum. We are probably at what, like 1%, half a percent, whatever the drop is today. All right, guys, so there's the market open. There's gold. We're going to get ready to day trade this. We're going to put charts up we're going to put this up instead. Put 3 charts up here. Stretch this out. We got a nice cushion on the day to day trade this. Market cracked lows and is now retracing. Yeah, sorry, Isaac, bro. Begging people for money here, dude. Honestly, you're almost certainly lying. And just hoping that, you know, dumb Americans send you money anyway. Sorry, bro, you're banned. All right, so again, market dipped a little bit at the open, starting to retrace back up there. Let me make the stock charts a little bit larger here so we can still watch them, so they're not too clouded by this. And again, before we day trade, guys, I do want to put this out there. Remember, I have no idea what I'm talking about. I am terrible at this stuff. I cannot guarantee any results in markets. Always make your own assessment, trade responsibly. Understand CFTC Rule 4.41 and all that it entails. And good luck, guys. Be safe. All right. So we're kind of flat at the opening bell, kind of trying to get some legs and some of this stuff here. The SPY is down, of course, on the day. The NVIDIA chart is down on the day. We have the NASDAQ, basically the Q chart up on the right side here in futures. All right, so we're consolidating here. NVIDIA right at 700s is now under 700. If it holds there, that might signal bullish action. If it doesn't hold there, that might signal bearish action. But again, I'm not sure. Very flat opening bell movement here. Is Snap down on the day? I'm in Snap right now. I was green the last time I looked at it. I was down. Okay. I'll buy a little bit more Snap. You know what? Our average is about flat anyway, so we can play around with that. Bob is up pretty big just now. I might get ready to buy some of this. I'm going to go ahead and buy some of this. I see NVIDIA trying to move. All right, so we got 2 contracts here. I want to add a little bit more to this if we pull back, but I also understand risks. All right, so there we go. We're green. All right, we're going to take half of that off, lock in a little bit of profit there. Take the other half off there. We're scalping very small at the opening bell. I'm going to go ahead and lock that profit in. So, yeah, we are up about... We got a 7.5 to 1 win-loss ratio. Our drawdown's only $65, and we are up 250 or so on the day. That's nice. We are seeing some SPY rebounds here. Banned the guy that was asking people for money, because again, most of the time, if you don't know the internet, what they usually do So we're kind of flat at the opening bell. I don't know what to do here. I want to buy the NASDAQ 100, but it's such a flat chart. Bob is bouncing all the way back, though, so we're looking a little bit better since the opening bell for sure. Who knows what we're going to do, though. The 10-year yield jumped. Let me look at TNX. Yeah, bonds are usually competitive with equities. So they're going to move inversely a lot of the time. So like if equities move down, bonds move up. And you can see the 10-year. If you look at TNX symbol, it's at 4.26% for 10-year bonds. So they're doing all right. Starting to rebound a little bit after the opening bell. Where's my channel at subscriber-wise? Ooh, guys, we only need 130 subs left to break 125,000 subscribers here, team. We only need 130 left. We got almost 1,200 people here still. So subscribe, team, if you haven't yet. We appreciate it. ARM is still moving up a lot, actually. NASDAQ bouncing back a lot, too. I mean, it's still down big on the last few hours, but... Dip bought Tesla and NVIDIA might regret it. Hey, good luck, brother. Bob is bouncing back up, too. Scalp it a little bit more. I mean, we're just buying a small little position. Look to buy on a pullback here if we get one. It's all going to be relative to what NVIDIA does here, though. Didn't really get a chance to add. I mean, we can add a little bit to this here and then scalp. A little playful move. We're trading small. We got a nice cushion, though, so we're going to get ready to scale out and scalp that, too. So, yeah, we're up like almost 280 on the day. There's a dip, though. Look at NVIDIA dipping down to the VWAP here. Depends on if we think it's going to bounce. The SPY, I'm going to put up just 2 charts so it's easier to see here. But the SPY is right around the 200 EMA, right at 495. And so I don't think a break of that is guaranteed either. So I think we just got to be careful. CPI is already out. It came out at 8:30. Bought the Palantir dip. I'm in Palantir right now. I haven't really looked at it, though, since CPI. Oh, Palantir's back up. NASDAQ's still bouncing back a big amount, but it's still within the range of the big pullback. You can see how big the CPI pullback was here, and then we're rebounding pretty fast. Also, guys, join my Discord. My Discord is completely free. Doesn't cost anything. We try to post on there daily. And we got a bunch of like-minded individuals there. So join our Discord. Here's the link if you haven't already. Yeah, I mean, we're going to be live streaming all week. We're going to be streaming tomorrow. We'll probably start the stream a little bit later in the morning because we don't have any big earnings or any economic reports tomorrow. But Thursday, we've got a bunch of stuff. We've got retail sales, durable goods. We've got jobless claims numbers. We got a lot of stuff. So we'll have over 1,000 people here Thursday at 8:30. Friday, we have PPI. So we'll have over 2,000 at least here Friday at 8:30 as well. So every day is pretty busy this week except for tomorrow. All right, here's the problem. Look at the SPY reject. The SPY rejecting that volume weighted average price level. That's a risky spot for it. Let's see if it holds. All right, guys, we only need like 114 subs. We're almost there, team, almost there. ARM's still ripping up. Palantir. AI stocks are still doing okay. NVIDIA is still at the highs of market hours as well. Dipped a lot from CPI, but it's still pushing up there. So we're at almost 710s. I mean, DD, I have 4 monitors, rather. I have 4 monitors, so I use a bunch of different indicators, to be honest. We certainly don't just use one. But we are also using, I mean, again, if you look at an hourly chart for Chart Prime, like you zoom in, look at the hourly chart for Chart Prime. We also set alerts, but like this is an hourly chart. So every candle represents an hour. Look at the strong signal here and then days of bullish action. Look at the sell signal here, days of bearish action, right? But again, we have it up on another screen. We have 4 big monitors that we use. You only see one of them. So and honestly, look at it. Look at a 1-minute chart. So here's Chart Prime on a 1-minute chart, right? So this is a 1-minute chart. Genuinely impressive. Like, look at this. Strong signal showing up way back here. This is a 1-minute chart, so more for like day trading. Strong signal, beautiful bounces. Buy signal there, nice little rip. Strong sell signal there, bounce or dip. Buy signal there, bounce. Look at the strong sell signal coming in there, and then look at the huge downward pressure. So even on a 1 minute, really short-term perspective for Chart Prime, it seems to be pretty accurate. We can put a 5-minute chart up and test it that way too, just on today. Again, the key is looking for good volatility. If you can look for good volatility, that's when it works the best, in my opinion. So, right, so here's the NASDAQ. Look at the strong sell signal there, worked. Buy signal there. We got a couple follow-throughs, but even if you say that one didn't work, strong sell signal, beautiful. Buy signal, bounce. Sell signal, drop. Buy signal, bounce. I don't know if that one worked. You could maybe argue that one didn't. But again, you keep going back. Look at the sell signal, drop. Strong buy signal, beautiful bounce. Sell signal, drop. You keep going back, buy signal, bounce, sell signal, drop, buy signal, bounce, sell signal, drop. Again, you can back test it yourself. It's genuinely impressive. I can't guarantee it's always going to work, and you want to target high liquidity times. And again, you can use it on any time frame, anything with a symbol on TradingView. You can also use this link if you want to check it out too. But again, they're a sponsor. I'm biased, of course, because they pay me money, so I'm biased in their favor for sure. But check out the link. We'll also put it up in chat as well. Yeah, you can use it on a daily time frame. I can check that if you want. Give me a second. Here's the link too if you want to backtest it yourself. Let me try the daily. I haven't really checked the daily one a ton because again, with investments, it's more about like overall company health for me personally. But let me check. Again, I can't guarantee you're gonna make money with it. Nobody can, of course. Yeah, I mean, on a long-term chart, here's the daily chart for Chart Prime. Pretty impressive. I mean, let's look. All right, so let's look. Let's back test it. Buy signal certainly worked. Strong sell signal certainly worked. Buy signal certainly worked. Sell signal certainly worked. Buy signal certainly worked. Sell signal certainly worked. Strong buy signal certainly worked. Sell signal certainly worked. This one maybe you could argue didn't work. This one worked. This one worked. All right, so all of these except for one. Let's count this. All of these except for one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So all of these, 1 out of 13 didn't work from what I can gather. And again, I can't guarantee anything, but this is a daily chart on the NASDAQ. Genuinely impressive. Again, genuinely impressive. I've never looked at a daily chart with that, but hey. Again, I'm not telling you guys to buy anything. They're a sponsor of mine, but I'm impressed. You know, prior to them, I was always kind of skeptical of some of these software algorithm companies, but they impressed me, honestly. All right, so NASDAQ's consolidating. The problem I see is the SPY starting to dump here. Like, look at the SPY start to fall. That's a little sketchy. All right, so we got 124.9 thousand subs, so we need 100 subs left. 968 people still here. What's your view right now on the Dow? I don't really watch the Dow a lot. I understand the Dow. Dow's kind of like the OG one that a lot of people use. Moves very similar to the S&P, but I don't personally like day trading the Dow. But it's subjective, and I'm pretty sure it's going to be very similar. Dow's kind of breaking down right now. It's kind of moving with the SPY or the S&P here. So Nvidia, Meta. What's Meta doing today? Again, we're kind of flat after the opening bell here. I haven't really been day trading a ton, and we had a pretty good day in this Combine account, but I haven't been day trading as much as I normally do, just because, you know, it's a little bit choppy after the open. Nvidia is the only thing trying to hold the market up. I disagree with that statement. I mean, look, we can look at some other stuff. Again, here's Walmart on the year. Walmart's having a good year. Apple's having a good year. Microsoft's having a good year. Home Depot having a great year, you know. Lowe's is having a green year. You know what I mean? Like, it's certainly not just Nvidia. Now, Nvidia is helping it for sure, but it's certainly not just Nvidia. Again, you got to look at all the stocks and all the big cap stocks. Again, I'm holding a bunch of different positions here. Apple, ARM, AMX, or I was holding AMX, Boeing, BABA, Citigroup, Chewy, Delta, Datadog, Disney, Etsy, Ford, Gold, GameStop, Google, Home Depot, Honeywell, Coca-Cola, MGM, Microsoft, Nike, Oracle, Pfizer, Palantir, PayPal, Snapchat, SoFi, SPY, Tesla, Tyson, Walgreens, Walmart, Exxon. And I'm green, nicely green on this portfolio. And so it's certainly not just Nvidia. Nvidia is the only thing trying to go. Oh, you might be talking about right now. My bad. Yeah, you're probably kind of right today. Yeah, you're my bad, brother. I think you're actually right today. I think Nvidia is pushing up relative to the rest of the market. It's one of the reasons you see the SPY so weak. Yet the Nasdaq is kind of green, helping tech. So it's not just Nvidia. It's tech in general. But yeah, you're right. It is Nvidia certainly today. Apple's red on the day. Microsoft's doing okay since the opening bell. So it's Nvidia, Microsoft, and Meta. What about Amazon? Amazon too. So Nvidia, Microsoft, Amazon, tech is doing well. The rest of the market's not so much. I'm not going to sell all of them at the same time. Some of these are investments, so I'm not just going to cut all of these trades at once. That doesn't make sense. Again, a lot of you guys got to understand the true edge in markets is long term. Like, I day trade every day, and I think day trading is great, but I think you have to understand most day traders lose. That's just the truth. Regardless of anything, that's the reality. That's the truth behind it. Most day traders are going to lose money. And so you can day trade, but you better hedge against that long term with investments, in my opinion, as well. I'm not telling you to do anything. Make your own decisions. Not liable if you lose. I have no idea what I'm talking about. But hedge against that long term. Like, regardless of how many people are predicting crashes, or how many people are betting on corrections, or how many people are bearish, or whatever it is, dollar cost averaging over a long period of time is one of the most into only blue chips. I'm not talking about mid caps. You can diversify into some mid caps, but it should be certainly a minority of your position. It shouldn't be most of your position in small and medium cap stocks. Blue chip healthy legacy companies and broad market index funds are going to be the safest bet. You dollar cost average into those long term, and you sit. If you hold them for years, you are almost certain to make money and to a certain extent keep up with inflation. That's the biggest misconception people have. A lot of people are skeptical. They don't trust markets. They don't trust all these different things. And everybody's always telling them the market's about to crash. And so they never end up getting into the market, and they miss out on crazy bull runs like we had in 2023, because you got so many people that are telling them the market's going to crash. You got so many influencers saying, hey, the market's going to crash. The market's going to crash. And it just isn't so. There's a very famous quote from The Big Short. It's not from The Big Short. What gets us into trouble? It's a Mark Twain quote. It's not from The Big Short, but it's in The Big Short. It's a Mark Twain quote. It says, "What gets us into trouble is not what we don't know. It's what we know for sure that just isn't so." That's Mark Twain quote, but it's very true for markets, right? Where a lot of people think we are for sure going to crash, for sure going to correct, and then the market jumps 23%. And so the market doesn't have to do anything short term or long term, I guess. But the probabilities of it going up long term are very, very high. And you don't want to miss out on that edge chasing nonsense, trying to be the next big short predictor like Michael Burry. Again, Michael Burry's been wrong more than he's right. And so just understand, crashes are very difficult to predict. Almost everybody's wrong about them. And, it's much easier to just ride the upside movement. You won't ever sell in a crash? It depends. It depends on what it is. I'm sure I would sell some stuff. But I'm also going to be buying up stuff on a big pullback crash thing. It just depends on what happens. Sorry, I got acid reflux. Yesterday before bed, I ate pizza and cheese sticks. And now my nose is all stuffy and I got acid reflux. SPY breaking lows while the NASDAQ is moving up. Very weird market where the NASDAQ and broad market index fund and the NASDAQ 100 is up since the opening bell, but the SPY is down testing lows. And so typically the bears win in this scenario where if one's trending down and one's trending up, typically the one that's trending up will eventually start following the one that's trending down. It doesn't necessarily mean it has to happen though. So just understand, you know, it doesn't necessarily mean it's a certainty, but just be smart, be risk averse right now. All right, guys. So again, market's starting to flush. We'll see if it holds this, but all right. So yeah, I have acid reflux, unfortunately. So I have a slight food sensitivity to tomatoes. What it actually is, though, a lot of the time it's MSG. And so MSG I react very negatively to. All right, guys. So we're still sitting here hanging out. Amazon up to almost 170. 170. Baba breaking down a little bit. Arms still trying to move. Yeah, I'm in ARM right now. I mean, my average, I have the luxury of having a really good average. Tesla actually pushing up a little bit too. So look at the NASDAQ get a big rip up. I'm trying to see what it is. Amazon broke highs. All right, guys. So again, Morgan Stanley just put out a quote. Morgan Stanley says, quote, "The acceleration in core PCE is aligned with our view of a bumpy path ahead. We think that sequential prints in Q1 will be overall higher than what we have seen in the last 6 months, delaying the decision to start cutting rates in June, to June." So Morgan Stanley thinks June is when we're going to cut rates. That's dropping now. Interesting. Morgan Stanley just put out this quote. Very flat open. Yeah, Tesla ripping up a little bit. We might buy this dip now. We got one contract. We're going to add to it up to 5 contracts here. Take a little risk since we can. 4. We got 4 contracts. Here, that's going to be our last add to this, and we're just going to have to be careful. Okay, we're taking a little bit added risk, but the pullback, I don't know if I like this pullback. We'll see. Punished. Yeah, I mean, I'm looking for a retracement, and we're not down that much, but it depends on if Nvidia starts bouncing at the VWAP here, which is possible. That's why the only reason we haven't decided to take profit here yet is because of potential Nvidia bounce. But I also or not take profit, cut the loss. We have a cushion on the day, so we can't worry too much about it, but we'll give it a little bit of time. All right, now we're back to pretty much flat here. You love to see it. I mean, we'll see if it holds this, though, but I'm trying to see what it is. Maybe Amazon is helping influence the market this way. I'm going to cut half of that, just protect the trade a little bit so that we're not taking too much risk here on the upside. There we go. Take half, take another half. Maybe add back to this too. I don't know what's dragging the market like this, but hey, I'll take it. 2 contracts now. All right, we'll take another half off. All right, we'll take another half off. So yeah, we are now up $300 basically on the day. Taking small size just from the volatility. Our win-loss ratio is 7 to 1 though. 7 to 1. All right, still hanging out. I'm sticking on a little bit later day trading today. Also, guys, don't forget to subscribe here. We need less than 100 subs to break 290 or 220 or 125,000. We're pretty close. And again, we'll be streaming tomorrow. We'll break it this week for sure. Yeah, great win-loss ratio, up $300 on a combine account, but you know. So still consolidating here. I'll buy this little dip as well. We'll keep it small though, and then maybe add a little bit to it if we get a better movement here. All right, so we're in 2 contracts. I might add a little bit to this, but I'm not going to add more than 3 contracts to this position here. We keep retracing here, but I also don't trust this very much. There we go. All right, so half off. Lock that profit in just now. Big retracement back up. We can let this kind of limit our risk here too. All right, so a nice little bounce back up. I'll go ahead and lock that in. We're up about 320s on the day. Kind of small, steady gains right now. All right, guys. So we're kind of sitting tight. Why did we dump today? CPI really bad? Yeah, CPI, I wouldn't say it's really bad, but it wasn't good for sure. Tesla's still ripping up at 187. Tesla almost flat on the day, which is interesting. All right, so looking at our poll, when will the FOMC cut rates? Still got the majority of people expecting March. I disagree. I don't think that's true at all. We have a little bit of what would argue a bull flag here on the chart. I don't know what we're gonna do. Amazon pulling back a little bit now as well. Amazon dipping down to 169.50s. So Amazon pulling back. Tesla's still at 187s though. Yeah, I don't think it's going to be March. I certainly disagree for the March reading. I see a lot of people guessing March. Bitcoin is taking off before the April halving. Yeah, I mean, Bitcoin's an interesting one. It hit 50K. It had a CPI pullback, so it did pull back from CPI, but yeah. I'm probably going to go ahead and get out of here, guys. I don't see any good action moving forward. It's very choppy today, so we will be back tomorrow, bright and early, same time as always. Again, if you want to day trade with me, this is a combine account on TopStep. What TopStep does is they give you a demo, they test your skill. If you could pass the test, they fund you. If you don't pass the test, again, your risk is limited. That's the benefit of TopStep. You know, they're the most legit funded program in the world. They pay out millions in actual withdrawals every year because if you could pass their test, once you get funded, you get a 90% split. And you get to keep your first 10K in profit, free funding coaches. They've been around for over a decade. It's just a great way to learn how to day trade. And in the futures market, I'm essentially day trading QQQ price action. I'm day trading the NASDAQ 100, which is what the Q tracks. So it's the same price action. There's just no PDT rule, and it's very similar to day trading in that regard, just limited risk. Again, they're a sponsor of mine, so I'm biased, of course, as I always tell you guys. But again, you can check out the link right there. Also, check out Chart Prime. I'll see you guys later. Y'all be good. Hopefully, you guys didn't lose too much money today. And our green streak on predicting CPI correctly has now effectively ended. And so that's all good. It's all good, guys. Listen, we weren't going to get everyone right. But again, I'll see you guys later. Y'all be safe. Y'all be good. I'll see you guys tomorrow bright and early. Remember, PPI, the other side of the inflationary coin, drops Friday. So PPI drops Friday, CPI dropped today, PPI drops Friday. Tomorrow's kind of like a nothing burger. There's nothing really going on. Thursday, we get durable goods, jobless claims numbers, and retail sales all dropping Thursday morning at 8:30. And we will stream the entire thing live like we always do. So again, Thursday morning, we get all that stuff dropping. Friday, we have the other side of today's CPI report. It's called PPI. It's Producer Price Index. It's basically CPI is for consumers. PPI is for producers or sellers, right? So today we had consumer prices. Friday, we get seller prices. And again, just like today, we'll cover it very quickly, as we always do. Hit that subscribe button. Hit the notification bell. Thanks so much, guys. I appreciate the love and support. We're almost to 125K. We need 80 subs, which I'm just going to guess we're not going to get today since we only have 600 people here. So, and that's all right, guys. Y'all be good. I'll see you guys later. Be safe in the markets, team. And yeah, we'll see you guys later. Y'all be good.